never say anything like that, but given the circumstances that prevail, we have no choice. We need it, and we need it badly.
Can you buy the FANGs right now, Dennis?
No, I would not buy the FANGs with your wealthy money, Tom. I'll let somebody else who's wiser, more courageous than I am, and probably younger than I am do that. God bless them. I wish them well, but I think that this shall come to tears eventually.
Is there any value in stocks, Dennis? Because some people talk about a K-shaped recovery. You know, some stocks like the FANGs have gone skywards, and other parts of the quoted American universe have gone down. And maybe those jaws close. Maybe there's some value stocks that need to pick up here. Do you see any of that?
If you made me buy something, I'd probably like to buy General Motors. I'd probably like to buy Ford. I'd probably like to buy Exxon. I'd probably like to buy Chevron. I'd probably like to buy the bank. They seem relatively inexpensive, relatively cheap, and likely to do better over the course of the next 2, 3, 4, 5 years. Will I buy the FANG stocks? As I said, not with Tom's money. I'll let somebody else do that. Yes, so I'm a believer that this is going to be either a W or I like this K version of economic rebound. We are bouncing a bit, but are we ever going to have the same number of hotels, the same number of restaurants, the same number of small clothing operators that we had a mere 6 and 7 and 8 months ago? For a very long period of time into the future, I'm afraid.
Yeah, what happens to our cities is certainly a big question. Dennis, thanks very much. Thanks so much for joining us. Dennis Gartman, chairman of the University of Akron's Endowment and retired editor of the Gartman Letter, of course. Coming up on the channel, on Bloomberg TV, on Bloomberg Technology, in fact, Mark Benioff, the Salesforce.com CEO. Join us for that later. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
We've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
Donald will not rest until he has done all he can to take care of everyone impacted by this terrible pandemic.
He has ended the ridiculously unfair trade arrangement with China that punched a hole in our economy. Those jobs are coming back home.
Right now, our economic health is coming back. With emergency spending and tax cuts, Americans are going back to work. Now, looking ahead, more tax cuts and regulatory rollback will be in store.
I don't want to use this precious time attacking the other side, because as we saw last week, that kind of talk only serves to divide the country further. I believe that we need my husband's leadership now more than ever in order to bring us back once again to the greatest economy and the strongest country ever known.
The First Lady, the Secretary of State, speaking at the original Republican National Convention. There's no question about that. We have with us the original Emily Wilkins, of course, Bloomberg government reporter, but really congressional reporter as well. Emily, I am fascinated. I know a few people have spoken from the Hill in support of President Trump in this staged convention. Great. But there seem to be so many people missing. What is the response of Republican House of Representatives and senators to this convention?
I think so far we've seen most of the lawmakers be supportive of the convention, supportive of Trump, supportive of the campaign. And you're right, you did point out that we had seen a number of people already from Congress go ahead and speak. Senator Tim Scott the other night had sort of a big address. We also heard from Representative Jim Jordan from Ohio, who's one of the president's closest allies in the House. I mean, look, there are a lot of people in Congress. You can't necessarily fit everyone in, but I think at this point, most Republicans are pretty happy with how the convention is going at this point.
What is the message here that you see to the key suburban voters?
So last night, there was a lot of appeal to women in particular. And I think when you think of suburban voters, you do sometimes tend to think of women who are college educated, who have grown disenchanted with Trump because of his rhetoric, even more so than his policies. And Trump knows that this is a very important demographic for him. He knows that the suburbs is highly critical. And so I think last night you saw a bit of a softening in the message. You saw an appeal to women, you saw an appeal to minorities, and you saw that really accumulate with First Lady Melania Trump's speech last night, in which she declined to really criticize and instead made a strong defense for why her husband deserved 4 more years.
Yeah, we were talking to one of our colleagues, good to see you, Emily. We were talking to one of our colleagues earlier who was saying that maybe she should be used more often, as she maybe provides a different vision, or certainly a different style to President Trump. It is very much a Trump affair, a Trump family affair. How does that go down with the rest of the Republican Party? Are they happy to see that? Do they believe that it will deliver?
I mean, let's be honest here. The Trump administration has been a family affair. You've seen Ivanka and Eric and Don Jr. continually take major roles, and Jared Kushner. You've seen them all continually take major roles within the Trump administration. So I think that this convention is sort of just a reflection of what we've seen from the last 3 years. That, you know, that when you vote Donald Trump into the White House, you get the Trump family that comes with him.
What do we look out for today? I think we hear from Mike Pence today. What's going to be the highlight, Emily?
Yes, so definitely Vice President Mike Pence. I think a lot of people are going to be watching his speech to see what his ambitions might be if, you know, whatever happens in this upcoming election for 2024. Is Pence interested in a run? How might he try and bring a message to the American people? So that's, I know, one thing that a lot of people will be keeping an eye on today.
Emily, I've got to ask you about the stimulus. We were just on with Dennis Gartman, who's a card-carrying Republican, and, you know, he's the last guy I would expect to scream stimulus, but there's Gartman screaming stimulus. Where are we on stimulus?
At this point, Washington's pretty quiet. I mean, the House isn't here, the Senate isn't here. We are still waiting to see what is going to become of negotiations. But at the same point, a lot of members, particularly Democratic House members who are facing tough re-elections in November, they're beginning to really ratchet up pressure on Nancy Pelosi, saying, look, we need something here. We need some sort of bill. We need some sort of relief. Another thing to keep in mind, that government funding expires after September 30th, so right before our October 1st. The government needs to be refunded again. Congress needs to figure that out. So I think those two things, that they have the potential to go together.
I mean, I get the American Airlines gets the headlines, Emily, and all the other airlines, the airline aid comes to an end, folks, and thousands are laid off. Fine. Is small business in any way, shape, or form actually represented in the marble halls of Congress?
Is paid a lot of lip service by lawmakers. I mean, I do think you see certain things, PPP funding, changes that have been made to that funding to cater more towards small businesses. There has been a sense that there is, needed for small businesses relief. But at the same point, you're right. I mean, it's a lot of these bigger industries too, and larger questions. What is going to happen with the travel industry? What is going to happen with airlines? It seems like to some extent these industries are going to be shaped for years and years to come from what we're seeing right now.
Back to the RNC, Emily, and the convention seems to be pretty policy light, but watching the DNC last week, maybe that was policy light as well. Do you sense we're going to get any clues around policy as we bring this week to a close?
To be honest, I wouldn't be betting any money on that. Certainly, I think these conventions, they're not so much about policy. They're about really appealing to the electorate, emotionally inspiring people to come out to vote. It plays on the culture wars a little bit from the topics that you've seen discussed, the people who you've seen put up there. I mean, these are individuals, the couple who became famous for waving guns at protesters outside their Missouri home, the student who was part of the controversy over, whether or not he acted appropriately toward an older man in Washington, D.C. Right. I mean, these aren't figures within the party. These are individuals who kind of came with these big controversial stories that a lot of people had heated opinions about.
Emily, thank you so much. Emily Wilkins reporting from Washington here on a convention being held, it seems, in Washington as well. We want to take a moment here on Apple Computer. Dan Ives has appeared on surveillance many times. You've seen him with his optimism on Apple. He shocks this morning with a reset to $600 a share. I took the log extrapolation of Apple back to the beginning of 2019, and the extrapolation of Apple up $100 a share, and it gets you out to June of next year is sort of the trend line. It's evident. That's not exact math, but that gives you a sense of where we're going. But I'll tell you, Anna, this is something to see the sell side and to see Ives at Wedbush come out with a new price target as well. It's really something, Anna, that to me is just uniquely American right now. There really isn't a European equivalent, is there?
Yeah, absolutely. And often we hear that from fund managers that they really want to allocate more to Europe. They see it as a catch-up story, but there just isn't the tech exposure, and there certainly aren't the big FANG names. Interesting, again, this new bull case of $700 a share at Wedbush, really interesting. And Apple winning in the courtrooms as well against Epic over Fortnite. Not that I'm sure you're a big player.
No, I'm not, but actually we had a good conversation yesterday with Lisa Bramwitz, all three of us on at the same time. Is this whole Minecraft, Bed Wars, Fortnite thing. I mean, it's, what can you say about your kids other than get back to school as fast as you can? Let's move back to politics right now.
We'll find a 12-year-old expert.
Yeah, we'll do that. Let's move back to politics right now. He made a big splash the first night of the Republican convention, talking about its madness. Here with our Kevin Cirilli is Mr. Trump Jr.
If Joe Biden knew how to fix anything, why didn't he do it? He's had a 50-year head start, Kevin. He's been in Washington, D.C. as an elected official for 47 years. I don't want to get fact-checked on CNN. 47 years. Now he's going to do all these things. The reality is this. For the average American, for working-class Americans, Joe Biden, between NAFTA and TPP, that should be disqualifying in and of itself. He shipped our American dream abroad for everyone else to enjoy but our own people. But now he's going to be the man of the people. It's asinine. And for anyone to believe that this guy could now finally deliver on it, why would they do that?
China was a key theme in your speech last night. You really went after China. You really made the case that the Trump administration is going to continue to draw counters with the Communist Party of China. Yes. And yet, even as that was happening, top administration officials were dealing with their counterparts in Beijing on the trade deal. here we are in the middle of a pandemic where so much of the world's economy is intertwined. How do you balance that of making sure that business gets done so that farmers in Iowa aren't hurt while also holding China accountable?
Well, again, Donald Trump is the first guy to actually get a trade deal done with China. And while there are short-term pains, because there is no instant gratification in the real world, you do have to feel some short-term pains. And we did. And those people and those farmers were like, wow, Donald Trump actually got it done. The holy grail of trade practice. He got a deal done with China. All of these things that our politicians have spoken about for decades but never actually been able to effectuate, Donald Trump actually did it. So you can be tough on China, and if you're tough on China, they realize that they actually need us still more than we need them. That may not be the case in another decade. So if you don't put your foot down now, you never will, and you'll never be able to get that again. And I don't think that anyone watching really believes that Joe Biden, again, given his history, given his commentary about China not being a true threat to us, given his son taking $1.5 billion into his fund, $30 million a year in fees, I'm sure he's going to be very tough on China. It's ridiculous. Donald Trump actually got it done, but more importantly, Donald Trump got it done with an insane amount of incoming, more heat than any president has taken in modern history, and he was still able to get that done. If the Democrats see this election as a mandate and Donald Trump gets it, we gain back the House, maybe they'll actually do something to work with us to help make that happen.
From a political standpoint, do you think that's a winning issue for swing voters, that the issue with China, the mistrust in China, the mistrust in the Communist Party of China, that's a winning issue for swing voters?
I do. I think more so now than ever before.
Why?
I mean, I think people, well, because honestly, no one believes that China told the truth about the coronavirus. It started there. They lied to the World Health Organization. They lied to the world about the effects of this thing. They shut down travel from Wuhan to Beijing and to Shanghai while allowing air travel to Milan and everywhere else in the world, New York. They allowed this thing to spread. And that's disgusting. So if you aren't fed up, if you aren't upset with China now, you haven't been watching for 6 months. Now, you should have been for years, but the years prior, it was actually partially our fault. We had people like Joe Biden, whose entire policy was, if we build up China, if we maybe they'll become a democracy. That's not going to happen. It never happened. In fact, they have a genocide going on right now, and the left is totally silent on the issue. So I think we have to wake up to the realities of the world, and we haven't done that other than Donald Trump.
That was Donald Trump Jr., fairly animated with our chief Washington correspondent, Kevin Cirilli. Stay with Bloomberg for our continued coverage of the Republican National Convention that starts tonight at 10 p.m. in New York. Let's get the Bloomberg First Word News. For that, here's Ritika Gupta.
Thank you, Anna. Hurricane Laura is taking aim at the Texas-Louisiana coastline, and the National Hurricane Center warns it could rapidly strengthen to become a life-threatening Category 4 storm with winds of 130 miles an hour. It's expected to make landfall late today or early tomorrow. The hurricane has already disrupted oil and gas production in the Gulf of Mexico. It could keep some of America's biggest refineries shut for months. The Food and Drug Administration commissioner tells Bloomberg, quote, "I made a mistake." Stephen Hahn spoke 2 days after substantially overstating the benefits of an experimental plasma therapy for coronavirus patients. Hahn says he worries that his mistake will hurt the public perception of the FDA. He also said the agency would not rubber stamp a vaccine. At the United Nations, the U.S. has lost its bid to reimpose sanctions on Iran over its nuclear program. The president of the UN Security Council rejected the Trump administration's demand. All but one of the Security Council members had said the U.S. proposal was illegal. And the investigation into the behavior of former McDonald's CEO Steve Easterbrook has expanded. Bloomberg's learned the company now wants to know whether Easterbrook covered up improprieties by other McDonald's workers. The fast food chain has sued Easterbrook to claw back his severance. He has denied claims he was involved in affairs with multiple employees. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Anna.
Ritika, thanks so much. On the pandemic, it is a good and occasional visit. Lauren Sauer will join us with Johns Hopkins University. Right now, mixed market, NASDAQ up 38. Wedbush with that Apple lift up to price target 600. Lauren Sauer, next.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
In London with Tom Keane in New York. Let's focus on tracking the COVID-19 virus, shall we? Bloomberg has developed a unique partnership with the leading authority on COVID-19. Johns Hopkins has been at the forefront of the international response. Every day we'll bring you insight from experts in public health, infectious disease and emergency preparedness. Today is no different. Joining us today is Lauren Sauer, Johns Hopkins University Assistant Professor of Emergency Medicine. Lauren, really good to speak to you. So let me start by asking you about convalescent plasma. It seems to be something that's created quite a lot of headlines around just how significant it could be. From your perspective, how much difference will it make, the use of plasma in patients?
I don't think we can actually tell yet how much difference it's going to make, and that's part of the challenge of where we're at right now with this emergency use authorization. Convalescent plasma has been around for a really long time, and we've tried it in a lot of different infections. And in this case, we have data from an observational study that's only okay. But with this emergency use authorization, we have a potential challenge for not being able to conduct the randomized control trials that we need as effectively as we could without the emergency use authorization. People are potentially less likely to enroll in those trials because they could just get the convalescent plasma. And so I think while we saw a modest benefit in an observational study, that gold standard hasn't been met yet for whether or not this is really going to be an effective treatment for COVID-19.
And something else, another sort of news development, if you like, that seems to be complicating the fight against the virus is the news out of Hong Kong that they found somebody who seemed to have been reinfected. This sounds alarming, but is this really the only person that's been discovered to have been reinfected? Because that doesn't sound like a very large group of people just yet.
Yeah, so we've heard anecdotal reports of reinfection. I believe this is the first person who has genomic data on the virus. So we saw those small changes in the strain to indicate that the first infection is truly different than the second infection. It actually is potentially a good sign for immunity because he was asymptomatic when discovered. We're still waiting to see the paper. This is data coming from a press release, but it means that he was symptomatic the first time he got infected and then discovered, I believe, in an airport asymptomatically infected, which means that even if the immunity did not protect him from reinfection, potentially it could reinfect you from having severe disease or disease at all on that second time.
Yeah, I think it was at an airport. I read the same. What about the race for a vaccine, Lauren? Which of the many projects that is currently in train excites you? We're tracking many of them here at Bloomberg. They're taking place all around the world, different scale to them, different geographical coverage, I suppose, importantly as well.
Yeah, I think this is the time to make sure that we really do those phase 3 trials effectively. I think there's something like 7 or 8 products in phase 3 trial right now. And there are various types out there. I think the mRNA platform of Moderna is exciting. The AstraZeneca vaccine is very exciting. I think any vaccine that produces a result that is going to provide substantial coverage, and also that the general population trusts enough to take. So those are the two key elements. And so we want to find in those phase 3 studies a safe and effective vaccine, and hopefully that is messaged to the public and produced in a way that people really buy into taking it to get that full protection.
Lauren, where we see a second spike in Europe or a continuation of the first spike in the US, and we see younger people being increasingly represented in those infection numbers, what does that tell us about the effect this is going to have on life, about how fatal it's going to be as we work our way through the virus?
It's a great question. I think as we get towards the fall, cooler temperatures, people going back to school, people trying to go back to work, and we potentially see either these continuations of first waves or second waves in some spaces. We have to really think about how this is going to impact us for the next couple of years. I think the WHO Director General just the other day said that this could potentially be around for 2 years or so. And I don't think that's unrealistic. I think the hope is that the vaccine is developed in a way that it buys us some time and we get to that vaccine point a little bit quicker so that we can go back to some semblance of our normal lives. But I think normal life as we know it is going to be inherently different. And, it's going to change the way we interact with people, both, in our communities and also more broadly as we think about travel and vacations and work travel and just even going back to office spaces. We will have to think about this differently for quite a few years, I think.
Okay, Lauren, thank you very much. Lauren Saw of Johns Hopkins, thanks very much for joining us. Stay with Bloomberg for our full coverage of the Jackson Hole Economic Symposium, including Fed Chair Jay Powell's speech. Tomorrow, 9 a.m. in New York, 2 p.m. in London. This is Bloomberg.
see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Rishka Gupta. Let's get your Bloomberg Business Flash. Palantir has broken years of suspense by filing to go public through a direct listing. The data mining company, backed by tech billionaire Peter Thiel, applied to list on the New York Stock Exchange. Palantir won't raise any proceeds in the listing, and it doesn't have traditional underwriters. Like many tech companies that go public, Palantir has never actually been profitable. Shares of Salesforce are rising today. The software maker topped quarterly revenue and profit estimates. That's considered a sign that many corporate customers responded to the economic slump by upgrading critical technology systems. Salesforce also raised its annual revenue forecast. And that's your Bloomberg Business Flash. Anna?
Ritika, thank you very much. Ritika Gupta there. European equity markets on the front foot, up 0.4%. Futures in the United States look fairly mixed, actually. Dow futures down. NASDAQ futures point to some gains at the start of trade. Coming up next on Surveillance Simulcast, Esther George, Federal Reserve Bank of Kansas City President, as we work our way towards, of course, the Jackson Hole Symposium. This is Bloomberg.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Looking for continued improvement in the economy, but the pace will probably slow down now that we've had this quick rebound.
They're going to keep rates at zero for a really long time, maybe forever. ever. This is a secular downtrend in the dollar that could be 10, 15, 20% over a 2-year period.
The large industrial, the behemoths of our time are probably not where capital wants to flow.
There is a certain logic in the market doing better than the economy here.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. John Farrow on sabbatical this morning, really upset over Lionel Messi in Barcelona. He was apoplectic last night, Lisa, when I spoke to him about this whole Messi Barcelona blow up as well. But lots going on. I got to go to something, Lisa, I got wrong here on radio, on TV, and thank you, Rob Carolyn. Lisa, I got the hurricane wrong. This has become serious rapidly.
Yeah, and Hurricane Laura is moving rapidly toward a Category 4 hurricane, possibly inflicting billions of dollars of damage on the Gulf Coast. Interesting to see how that evolves with respect to oil prices, but also rebuilding right now. What else can 2020 bring, Tom?
Well, it's going to bring a lot of challenges in economic growth. Let's get right now with the futures. Market doldrum, futures red and green on the screen, yields set a little bit higher by 2 basis points. But Lisa, let's get right to the business review this morning.
Yeah, what we're looking for at 8:30 a.m. is the July durable goods orders. Interesting to see what this tells us about capital expenditures at a time of such incredible uncertainty for companies. 1 p.m., the U.S. is selling a record $51 billion of 5-year notes. You asked yesterday, why are yields creeping higher? In part, it is because of incredible supply coming down the pike. And then today, we are going to see Vice President Mike Pence headlining day 3 of the Republican National Convention. Look out for his 2024 platform, also expected to be a potential Republican candidate for president in the future, Tom.
We've been telling all of you this week on Bloomberg Radio and Television the anticipation for the speech by Chairman Powell at Jackson Hole. We need to stop and explain Jackson Hole. It is a beautiful place with mountains that only Michael McKee has climbed, across the lake with a moose in the background and the lodge. I've had the privilege of being there for some very important meetings during the financial crisis, but this year is absolutely unique, run by the Kansas City Fed and their wonderful and interesting Esther George. Jackson Hole will be a virtual meeting. To begin our coverage, our Michael McKee spoke with Esther George, and they began on the framework at hand. Let's listen.
I will just offer you from my perspective that this has been, I think, a useful process. It's been a process that really asked of ourselves to look at what we've learned over the past decade, to try to think about how the economy may have changed, and importantly, to think about how we communicate to the public. So the process in and of itself, I think, has been a useful one, and I will leave to the chairman to talk about what we've learned from that.
Well, you've been considered an inflation hawk. Where are you on this idea of average inflation targeting?
So my focus on inflation, Mike, as you know, is to be true to our price stability mandate, that our 2% target really has to represent what's happening in the real economy. And so as we think about ways to better communicate to the public, I've never thought of 2% as a ceiling, but to really stay focused on what anchors inflation expectations in the economy. So from a communication standpoint, I think we will be talking about the kinds of things that help us do a better job of achieving our objectives.
Wall Street's betting, or at least many people on Wall Street are betting, that the Fed will change its forward guidance in September. Some of your colleagues say don't need to do that yet. Where are you?
So I would agree when I look at what the Federal Reserve has done since March in terms of interest rate policy, in terms of asset purchases, and the credit facilities we've had. I think trying to gauge what else does the economy need is probably premature. I think we are beginning to see signs of a recovery. We're beginning to see where the economy may have shortfalls, where it may be doing okay, but that is going to take some time. So thinking about what those other things are, I think has been a useful discussion. Whether it's time to activate those things is something we'll be debating.
Well, in the run-up to your conference and Chairman Powell's speech, there's an awful lot of discussion about inflation going on Wall Street and in the financial community. Do you think that all the stimulus that's been pumped into the economy is perhaps an inflation danger down the road?
Well, as a central banker, I think we always keep our eyes on inflation and what impetus may come to that. I think importantly, what we see today are really generally deflationary kinds of forces. So until demand comes back, until we see the economy regain its footing, it's hard to see in the near term. But as you point out, there is a lot of stimulus that may be out there at the point that the economy regains its footing. And we'll have to look and see what impact we see through prices at that point. But today is probably not that day.
Well, let's focus on your district, the 10th district. How would you describe the economy there right now?
So I think we see some encouraging signs. This region, of course, has experienced the virus in different time frames, in different levels of spread over the last 5 months. And what we see overall is there has been some improvement in the job market. We have seen some businesses that are beginning to come back. But of course, that's coming back from a very low level. Particular to this region, of course, things like agriculture and energy are very prominent. We know the farm sector has been under some stress for some time with low farm incomes. And this episode puts further stress on that, causing the farm sector to have to rely more heavily, for example, on government supports. Energy, too, with the rapid decline in oil prices, productivity, the producers had to lay down their rigs. So those two sectors in particular in our region, already under some stress. It will take some time, I think, for them to come back.
If I could ask you to expand on the labor market. What are employers telling you right now? Do they need more people? Can they find more people? Or are they just sitting back at this point and saying, we have to wait and see where the economy goes?
So we hear a variety of things that won't surprise you, but very important as we've talked to our contacts in the region. Again, it is often a function of the sector they're in. If they're in a part of the economy where they're dependent on air travel, dependent on entertainment or dining, they are struggling and having a harder time. And bringing people back in those sectors looks to be some time away. We also hear that some are having a hard time bringing people back because they felt like they were competing with some of the jobless benefits. Whether that's true today is less clear. So there are a number of dynamics that are affecting that labor market. And that, of course, is why it will take us some time to see where does all this shake out in terms of how that labor market heals and how we begin to see growth resume in the economy.
Esther George of the Kansas City Fed. We welcome all of you on Bloomberg Radio and Bloomberg Television Worldwide. A simulcast, Lisa Abramowitz and Tom Keene. Thrilled you're with us this morning as we really begin this coverage of this important speech. Our Michael McKee is our international economics and policy correspondent. Michael, I was really thunderstruck there by Esther George, of all people, the history of inflation fighting Kansas City, talking about deflationary tendencies. Did that surprise you?
No, the Fed in general sees a danger, more of a danger at this point of deflation, although it's cooled in the recent months, than they do of inflation. And one reason is they know how to fight inflation better than they know how to fight deflation. The good news is that we have seen a little bit of price inflation, more than we anticipated, but as Esther George said, not enough to be concerning at the moment.
We are boxed in always by our events at any given conference. The Boston Chatham Conference is, one example as well, Michael McKee. What are the degrees of freedom that Jerome Powell has to play with here, given a crisis, given the huge economic shortfall?
Well, they've sort of made their own room, Tom. The Fed has stepped in and done some extraordinary things that 10, 15 years ago we wouldn't have even considered. The lending programs are very, very broad at this point, and they're buying corporate bonds directly. So the Fed has more freedom than anybody thought possible. The question is, where can they go from here? It gets a little more difficult. They're lending to just about everybody at this point, and they've cut interest rates to zero. So unless they decide they want negative rates, which they don't, there isn't much more for them to do to stimulate the economy. It's all about how do they go about keeping rates low.
Yeah, and this is actually exactly where I wanted to go. A story on the Bloomberg terminal this morning saying that the Fed's shift is probably going to keep zero interest rate policies intact for at least the next 5 years, possibly much longer than that. Is the Fed running out of tools? How much is that going to be a central narrative of this conference?
Well, again, Lisa, it depends on what you're talking about in terms of tools. If you're talking about ways to keep the economy going, to add additional stimulus, they can do more QE and put more money into Wall Street and pump up the markets. But beyond that, they can't do a whole lot to add more stimulus to the economy. The difference now from the great financial crisis is the economy doesn't want to roll over and play dead. It's being forced to. The financial crisis, nobody wanted to borrow, so they were trying to push money into the system. But really, it's about how, at this point, you keep rates low, whether they would have to do something like yield curve control or additional QE. That's the question that Wall Street's going to be asking in terms of tools.
Michael McKee, nobody cares. I want to know, what are you going to miss most about Jackson Hole? Come on, is it that breakfast next door in the diner? Is it the 12-mile hike you'll take with Alan Blinder? What's the thing you're going to miss the most?
It's socially distancing from you, Tom. We'll miss the breakfast. We'll miss the people. We'll miss the moose.
I will miss, the moose. I'll miss the grizzly bear at 3 a.m. in the morning walking from, McKee's like ensconced, Lisa, in the lodge at Jackson Hole. State-of-the-art occasion next to all these bigwigs. I'm out in a log cabin 15 miles up the road and it's 35 degrees.
Tom, I know how much you like portaging, so they just wanted to get you close to a lake where you could really travel.
In touch with nature.
Yes.
Michael McKee starting our coverage here. It's going to be really, really interesting. Always an important paper or two coming out of it that changes the dialogue. Michael McKee, thank you for that conversation with Esther George. I want to do a little bit more of a data check here as well. Yields are higher this morning. That is important, even though the 10-year TIPS is stable, negative 1.00%. On policy amid this Republican convention, Libby Cantrell will join from PIMCO. That is a timely conversation. Stay with us on our simulcast on radio, on television. This is Bloomberg.
With First Word News, I'm Rishka Gupta. A warning today from the National Hurricane Center. It now says that Hurricane Laura will rapidly strengthen to a Category 4 storm with winds of at least 130 miles an hour. The storm is expected to make landfall late today or early tomorrow along the Louisiana-Texas coast. It's already disrupted oil and natural gas operations throughout the region. On the second night of the Republican National Convention, speakers tried to humanize President Trump and highlight his leadership. First Lady Melania Trump spoke from the White House Rose Garden.
I don't want to use this precious time attacking the other side, because as we saw last week, that kind of talk only serves to divide the country further. I believe that we need my husband's leadership now more than ever in order to bring us back once again to the greatest economy and the strongest country ever known.
Meanwhile, Secretary of State Mike Pompeo said the president has made historic progress towards Middle East peace. In Wisconsin, the governor has declared a state of emergency. There was a third night of violent protests in Kenosha over the police shooting of a black man. Businesses were vandalized and buildings were set on fire. Meanwhile, shots were fired in confrontation between protesters and a group of armed men. 2 people were killed and 1 was wounded. Palantir has broken years of suspense by filing to go public through a direct listing. The data mining company backed by tech billionaire Peter Thiel applied to list on the New York Stock Exchange. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
we are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revision.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
The Boston Symphony Orchestra presents BSO at Home, a collection of concerts, at-home lessons, and behind-the-scenes stories to enjoy while you stay at home. Learn more at bso.org/at-home.
Donald will not rest until he has done all he can to take care of everyone impacted by this terrible pandemic.
He has ended the ridiculously unfair trade arrangement with China that punched a hole in our economy.
Right now, our economic health is coming back. With emergency spending and tax cuts, Americans are going back to work.
Good morning, everyone. Bloomberg Surveillance. Some of the voices last night at the Republican National Convention. Right now, joining us, our chief Washington correspondent, Kevin Cirilli, Lisa Abramowitz and Tom Keene, John Farrow off today. Kevin, I want to talk about how choreographed all this is, and yet the news moves on. The news overnight from Kenosha, Wisconsin is just flat out not good. I am fascinated how the president addresses his law and order theme given these repetitive events in a most difficult summer.
You know, I think it's a really great point, and in fact, they're likely going to try to hammer home the point of law and order for swing voters in swing districts, as well as to boost turnout in more conservative districts. And last night, what you heard, whether it was from First Lady Melania Trump, who attempted to really humanize the president, but also in brief remarks from Secretary Pompeo, was this broader notion of optimism, Republican Trumpism optimism. And that's really what I think they're trying to do in the final two nights of the convention.
And what's fascinating here, Kevin, is Kenosha stuck between Chicago and Milwaukee, really strapped around both cities. It's the old George Romney AMC manufacturing belt on Lake Michigan. It was split Clinton-Trump in 2016. I mean, it defines 46% and 46%. How does a president break that and do the magic he did again in 2016?
Well, in terms of the law and order issue, I think that it's, you know, another case of America looking at the news through two different prisms of social media, fueled by social media feeds. And here's why. While progressives blame the White House, conservatives blame the local politicians on the ground in these cities and other districts. And as a result of that back and forth, it's why, quite frankly, it's a wash in terms of the effect that this would have out in November 3rd.
So that's the law and order part of the platform, Kevin. On the other side, we also have the economy very much front and center, as we have an unemployment rate at the highest levels since the last financial crisis. And before that, why is Trump's rating on the economy remaining so resilient in the face of such carnage in the economy?
Because of the company that politicians keep, and that's really based upon the conversations that I have with Democrats and Republicans, Lisa. The concern amongst independent voters, according to the Republicans that I talk with and what they're trying to push, is that Joe Biden would be beholden to some of the more progressive flank in his party, that they would have his ear. In contrast to that, the Democrats are arguing that they are going to be much more forcefully making a case on the economy by using not Senator Elizabeth Warren, but people like Meg Whitman, people like Republicans and former Governor John Kasich, people who are conservative who are now going toward Biden. And as a result of that, I think it's going to be a very tense dynamic in the debates, specifically on the economy.
Well, meanwhile, in the here and now, and forget the promises for November, in the here and now, we still don't have an additional round of stimulus in Washington. Are we expecting to hear anything about that this week as the air gets sucked out of the political vacuum with the RNC following the DNC?
You know, I actually, a couple of days ago, Lisa, I was reaching out to some folks on the Hill, and I said, you know, is this going to be one of the convention surprises where the president could come in and play deal maker and say he got a deal? So, you know, the conversations are being had over the next couple of days, but I think regardless of whether it happens in the immediate short term next couple of days or in a week or so, it still is an opportunity for the president to say he just got to deal with Democrats.
Kevin, we spoke with the Congressman Westerman of the 4th Congressional Arkansas District yesterday, and it's another world. I understand that, and he's very pro-Trump, and things are great, and the Razorbacks are going to play football, et cetera, et cetera. Great. The rest of the country seems somewhat flat on its back. Do all these elites, Democrat and Republican, do they understand out there how serious it is in both Democratic and Republican jurisdictions?
No, I mean, truthfully, I don't think they do, or they would have passed this stimulus months ago. You know, and to that point precisely, I think it's a really, really fascinating illustration to have all the old guard establishment of both parties go last week to the convention, and then to really have this current week really be a Trump solo convention. This was quintessential Donald Trump, a virtual convention, President Trump. And so the contrast is quite striking to see that. But the bottom line here, Tom, the ratings for both conventions are down because the American family has so much on their mind as they wrestle through this.
Kevin, American Airlines out with the first statistic. Lisa Bramwitz, thank you so much for this. 19,000 job cuts at American Airlines. Does that change the political dialogue in this nation, Kevin?
Yes, I think it does, because I think it's a stark reality in terms of what's coming in the fourth quarter of this year. You mentioned jokingly about football, but I mean, these are all incredibly localized issues. In Pennsylvania, a battleground state, the statewide high school sports association is going against the Democratic governor and saying and having the kids play sports. I mean, all of these, I bring that up because all of these hyper-localized issues, we can't look at it as just Biden and Trump. It's playing at a micro level.
Right. Kevin, thank you so much. Kevin Cirilli, as we looked at day 3 of the Republican National Convention. Lisa, David Koenig with that article on American Airlines. Really extraordinary to see them go from 140,000 down to 100,000 jobs through retirements and also firings.
Cutting 30% of their staff versus March levels. And it's really not an anomaly. Yes, the airline sector has gotten hit the hardest, but we also saw Bed Bath & Beyond coming out yesterday and announcing an additional 2,800 job cuts. Again, we hear this one after the other as they announce earnings. And at what point will this give some sort of urgency in Washington? Over in Europe, they're getting deals done. Germany announced an extension to their job support program. France expected to announce a pretty big plan next week. Where is Washington on this?
You really want to focus here on what we're hearing from economists and, of course, the reset that we may see into third quarter and fourth quarter. Lisa, Bruce Kasman of J.P. Morgan making very clear, not the gloom, but the caution of his view forward.
Yeah, and meanwhile, we are seeing some resilience in consumer spending. We are seeing ongoing resilience that surprised a lot of economists, yet this doesn't lead to a lot of confidence that the economy is really surviving on its own. It just, there's a lag effect. We won't know the pain until it's already here.
We will see forward. Right now, we see a mixed market as well, but I do want to state yields higher by 2 basis points this morning, a 0.71% 10-year. That's different than what we saw on Monday. It is a simulcast on Bloomberg Radio and Bloomberg Television. Lots of good conversation to get you through the convention to Jackson Hole coming up. From Wells Fargo, George Russ next. Stay with us. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a step in the right direction. Perhaps it's a harbinger for more changes in the future, like the completion of the banking union.
Good morning, everyone. Bloomberg Surveillance is simulcast, Bloomberg Radio, Bloomberg Television. John Farrow, to your many statements, he will not be doing the real yield this weekend. Unsure how they're going to get that off the ground, but they will. I've learned that John Farrow is not in Barcelona handling the messy mess.
Oh, yeah.
But he's out there somewhere, maybe on the edge of Tuscany. Lisa Abramowitz and Tom Keene somehow trying to move forward as well.
Does he have a 700 million euro exit clause? I'm not sure. We'll have to check on that.
That's 826 million. I think John's a little south of that. Not too sure
much
about
south
that.
of it.
For a data check right now, I'm going to do it before we talk fixed income here, and I'm going to really focus on math because it's Math Wednesday. We like that. We look at the nominal yield, which is higher, 0.7079. That's the current yield on the 10-year note. And then you take away inflation expectations, which is a measured movable feast, and you end up with the real yield, which you need to know hasn't changed over the last couple days, at negative 1.01 on the real yield. So what that means is in the last number of days, we've seen a rising inflation rate, rising inflation expectations, nominal minus inflation expectations, and that gives you that stable real yield that we've seen. That's a data check. Into George Rusnak at Wells Fargo. He has had a wonderful career monitoring the global fixed income strategy markets, and we're thrilled that he could join us today. George, on the real yield, do you look at it, or are you laser focused on the nominal yield?
We look at both, Tom. I think the challenge with fixed income right now is that traditionally you'd get two things out of fixed income, right? You'd get stable income and you'd get sort of a conservative part of your portfolio that offsets some risk to the equity market. And the challenge right now, Tom, is that you're going to have to choose one or the other, right? You're either going to get the offset to risk, look at treasuries, look at agencies, look at mortgage backs, or you're going to get the yield, look at high yield, look at emerging markets, look at prefers, hybrid type of instruments. Yeah. So the challenge is you're balancing both of those. But to your point, you compound that challenge of low rates with the idea of real rates now ticking back lower, with inflation picking back up. And also you compound that with the idea that duration has actually been picking up in assets. So the Barclays Agg of the past 5 years is actually halved in income. It's gone from 228 down to 114. And it's increased in duration by about 15%. Yeah. So the challenge there is you're getting actually more risk and less income. Right. And I think that's the challenge that most clients face.
To explain that jargon, Rusnak, all jargon this morning at Wells Fargo. Duration, folks, is out the x-axis, the amount of time, basically, that you hold a piece. And as he says, we're all going out 15% longer than we thought we'd go out. That's because I bought that 100-year Austrian looking for the payoff, George, somewhere out there. George, what I love in your research note is you have given up on the 60-40 mix, 60% equities, 40% bonds. If that's not the case, what is the correct mix?
Yeah, so the actual mix is probably going to be somewhere in between the two. And the reality is, unfortunately, as I described those dynamics of less income, more interest rate risk, as you described, you're going to have to start moving away from some of your assets, away from fixed income. I think the important thing is there's no magic bullet, Tom. It's not like there's one fund or one solution out there that is going to give you that magic solution. You're going to have to take a little bit more risk. The second thing is don't sweep it under the carpet. I've heard more clients talk about, well, don't worry about that. Interest rates will go back up. I think what you're hearing from the Fed is, again, in 2008, it took them 7 years before they raised rates again. It's going to take a long time before we start getting into a higher interest rate environment from our perspective. So you have to do it head on. And what we say is take an incremental and multi-pronged approach, meaning look not just for fixed income for your income, look at equities, look at real assets, look at alternatives, and then risk adjust those types of returns. So for fixed income specifically, we're looking at more of a balanced approach. And actually, we've taken on a little bit more credit risk. So we obviously own treasuries, mortgage-backed agencies, but we've taken credit risk in investment grade and have actually recently upgraded the favorable or high yield stance. We think there are some opportunities there.
Wait, you upgraded a high yield at a time of possibly a record year of bankruptcies. Please explain.
Yeah, that's a challenging message, I understand. But we do think, obviously, there's some short-term challenges and volatility within the market, be it the idea of the elections, be it the idea of the longer-term issues of pandemic, be it the idea of fiscal stimulus. But we think over the long haul, this is a spot in the economy that you should start changing your philosophy and looking out over the long term. So even with increased potential defaults, we still think there are opportunities. Now, a lot of the money has been made with the triple C's actually compressing. We think you stay up in the higher grade of high yield, specifically the double B's. And more specifically, you actively have to look at these sectors, be very sector specific, and even on the issues themselves. You've seen tremendous technicals help out the high yield market. We think that's going to continue. 5 of the last 6 weeks, you've seen positive inflows. Last 5 months, you've seen positive inflows. We still think there's opportunity. You have 350 basis points or 3.5% over just investment grade corporates. We think over the long haul, that's been a proven time that you want to get into high yield. And that's why we're recommending it. Again, for investors that can do so, are not risk averse, and do so on an actively managed basis. Don't just take exposure to the market.
I just want to say, Tom, we are now calling high yield sub 4%. I'm looking right now at the double B yield, the bond yield on the top rating of high yield. High yield now 3.92%. Not a lot there, which is the reason why BlackRock, George, came out and said that they were actually downgrading their holdings of investment grade credit to neutral, saying that probably that trade has already gotten played, that everybody rushed into the top-rated credit and probably got any gains to be had. Do you agree? Are you reducing your investment-grade exposure at this point?
We haven't yet. We're evaluating that, and I think that's part of our thesis also for the high yield, right, is that spread that we're talking about, where you've seen some compression on investment grades, but you haven't seen it on the high yield yet, so we still think there's some opportunity yet. We're still favorable on investment-grade corporates, but again, I think the really important thing, Lisa, is you have to be really active in this market. You have to look sector-specific, and I would argue even security-specific, to grab that yield without picking up the incremental risk.
George, is dividend growth a yield equivalent?
We think that's part of the solution, Tom. That's not the only solution, but we do think that that's part of the solution. So you obviously are taking away a little bit maybe of your growth potential from a capital appreciation perspective if you do that in the equity markets. But quite frankly, the yield differentials are pretty strong right now, or the income differentials we think are pretty strong and compelling, that you want to look to diversify your assets within fixed income and look holistically, as I said before, not just within fixed income, but in equities and real assets and even in alternatives.
You know, I look, George, at fixed income and, you know, clipping the coupon and the charm of it all. Is it a total return year? I mean, with these nominal yields, I have no idea how somebody has a portfolio. Is it just take the coupon and pray, or can you actually think of total return?
Yeah, so I think if you're talking about the full year, absolutely it's a total return year because we've had so much appreciation over the first half of this year. But I think your point is, over the second half of this year, do we expect to see that type of appreciation? The answer is no, right? It is more of a clip the coupon type of income. And I think it's, again, that bifurcation that I talked about, the idea of you're going to have to get a little bit riskier if you want to get the income component. Look high yield, look preferreds, look emerging markets. And if you want to balance that with some of the conservative part of your portfolio, treasuries, agencies, mortgage backs, we think that balanced approach is the right way to go. And that mix will give you the combination of income plus the protection that you've known in the past from fixed income.
We're speaking with George Rusnak of Wells Fargo. George, I want to rip up the script because I'm going to take a page from Tom's book. There's something that's been kind of bugging me, and I've been seeing charts of increasingly tight lending standards for businesses at banks, and this doesn't cohere with the incredibly loose environment that I'm seeing in the corporate debt markets, with investors rushing to put their money to work in credit. How does this make sense to you? Are banks seeing something that investors in credit are not, or is there something else at play here?
Well, I think it's just traditionally that once you start getting sort of a challenging marketplace and entering into a recession, the banks traditionally do pull back on sort of lending standards or become more scrutinized over their lending standards, is probably a better way to put it. And at the same time, what you're seeing is just a tremendous appetite for income within the marketplace. So as corporations are issuing and trying to shore up their balance sheet, you're seeing investors come in, both institutional and individual, grabbing these attractive yields because, again, the prospects of the future, unfortunately, is that rates stay low for a long period of time. So grab that incremental income when you can. And that kind of describes that dynamic that we're talking about. A little bit more conservative from a lending perspective and a little bit more aggressive in liquidity within the marketplace.
I learned a lot here. George Rusnak, thank you so much with Wells Fargo. These are just hugely odd times, folks. We've become benumbed to it. This idea of nominal rates of a 2-year yield of 0.1563, the 10-year yield up 2 basis points, 0.71%. It just doesn't make any sense at all as well. Lisa, I love what you said there about high yield under 4%. I remember when high yield was well above 8%, 9%. This goes way, way back as well. When you take out a fee for bond management, how does anybody make money? The client, the shareholder of a fund? and for that matter, the fund manager. I just don't get it.
Well, there's an assumption here that you can avoid the potholes, right? The idea that you can look at the bottom line, at the fundamentals, and you can determine who's going to go bankrupt and who's going to make it through, and you can keep clipping that coupon from. And that's sort of the big question. Can we see this ongoing surge in bankruptcies that don't lead to some sort of contagion, that just lead to these ongoing potholes in specific hard-hit sectors with other companies able to hang on? I don't know the answer to this, but Tom, underpinning a lot of these bets in high yield seems to be the assumption that yes, there will be these survivors that will benefit from looser credit, even as you see an increasing tally, an increasing toll of losers going bankrupt.
You know, I just brought up on the Bloomberg, folks, a loaded high yield fund, and it's got a 100 beep expense ratio. How do you do a 100 beep expense ratio on a 4% coupon, Lisa?
Well, those fees have been coming down. It's a reason why a lot of people go into the ETFs, right? And we've seen ongoing inflows there.
Well, absolutely. Let me do a data check here on our simulcast this morning. Again, mixed market. Futures up 3, down futures at negative 42. Digital, I say digital. I meant the NASDAQ. Oh, folks, pa on my part. The NASDAQ up 54 points, still green on the screen there. That's remarkable. I forgot to mention this. I've been remiss in mentioning this. Dan Ives over at Wedbush with a new price target on Apple, $600 a share. Maybe that has a little bit to do with the lift that we see in the NASDAQ. Curve steepening. Lisa says I have to mention the tip.
Yeah.
Negative 1.01%. Stay with us. A simulcast. This is Bloomberg Surveillance.
With the First Word News, I'm Rishka Gupta. Hurricane Laura is taking aim at the Texas-Louisiana coastline, and the National Hurricane Center warns it could rapidly strengthen to become a life-threatening Category 4 storm with winds of 130 miles an hour. It's expected to make landfall late today or early tomorrow. The hurricane has already disrupted oil and gas production in the Gulf of Mexico. It could keep some of America's biggest refineries shut for months. The Food and Drug Administration Commissioner tells Bloomberg, quote, "I made a mistake." Stephen Hahn spoke 2 days after substantially overstating the benefits of an experimental plasma therapy for coronavirus patients. Hahn says he worries that his mistake will hurt the public perception of the FDA. He also said the agency would not rubber stamp a vaccine. China says it has made concessions in allowing U.S. regulators to audit its most sensitive companies, and now it's calling for direct talks to solve a years-long dispute that threatens global markets. Bloomberg spoke to the vice chair of China's Securities Regulatory Commission. He said he hopes there will not be a financial decoupling between the two countries.
For all the U.S. investors who have invested in these Chinese companies, they have made a lot more money than the average market return. And it's good for the Chinese companies as well because they have the access, right, to international capital, and listing in New York also helps raise the corporate governance standards of these companies as well. So it's mutually beneficial. So I hope there will not be a decoupling.
Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
One of the things that was really important about the policy response was the fact that it really protected household balance sheets, which means the consumers have the wherewithal to actually spend money as the economy continues to recover.
Really interesting conversation there. Mike Ryan, UBS Wealth Management, and this is some of the dynamics of the consumer. Right now, we're going to take a different twist on our simulcast. If you're just joining us, John Farrell off, Lisa Bramowitz, and Tom Keene on radio, on television, with a guy hugely qualified. At the University of Rochester a few years ago, he was known to embody.
Order placed to sell short British pound at 131.528. Order placed sell short at 131.528.
Workout for the beleaguered. Is that a hope, or can that be a reality?
First time, thanks for that glittering introduction. I think it's a combination of both. I think what you're going to see is obviously rationalization of retail space, which needed to happen. I mean, we were way over square footage, over stored, however you want to put it, heading into the pandemic. A lot of the boom from 07 to 2012 hadn't really come off yet. So there needed to be something. I think what's up in the air right now is exactly what the retailers that survive this and those that thrive, obviously, what their footprints are going to look like. I mean, we know that the surge in online spending has benefited, obviously, the retailers that had good online businesses. And those that had good online businesses were using their brick and mortar. You know, we're leveraging that to the max. I mean, you've seen that with Walmart, Target, Costco, Best Buy, BJ. So I think it's similar to the thesis that we had surrounding store closures ahead of the pandemic. You can't use a chainsaw. You have to use a scalpel. You have to be very thoughtful. And I think the retailers that are going to come out of this the strongest are the ones that are going to really dig deep into their brick and mortar and say, okay, what's it really giving us? And how can we get more out of it before we make that hard decision to keep it open or close it?
Well, let's get there right now. I mean, keep it open or close. I mean, you saw this in the 80s in Rochester when you were there, the decimation of downtown retail. We've moved on 30 years to a national, even global decimation of retail. What is the formula that Moody's sees to avoid store closures? I don't see it.
It's, again, we go back to what's your sales mix, and what do you think your sales mix is going to look like once we come out of this? And for the retailers, Best Buy yesterday, for instance, and Best Buy is a company that we have been, positive on for an awfully long time. This goes back to 2012, 2013. We saw Best Buy using its stores. Best Buy was one of the earliest buy online, pick up in store retailers. And yesterday they made a comment that 60% of their online sales were picked up in the store. Heading into the pandemic, we thought that was approaching 50. And, there's some nuance here because they closed the stores and they had curbside pickup and all that kind of stuff. But I think for the best retailers, they're going to be using those stores. And yes, you'll see some rationalization. But as we've seen with some of the mall operators ahead of the pandemic, they were becoming very creative about who they would bring in to fill that empty space. And I think this is going to be evolutionary. It's going to be the classic Rome wasn't built in a day and it wasn't done for free. There's going to be a lot of upheaval in brick and mortar, but I think the savviest retailers would find a way to use that physical asset to the best of its ability.
Charles, I got to say, the difference between 2020 and 2017 and 2020, people are saying, no, actually, perhaps having something physical may matter at some point in the future, whereas in 2017, it was sort of understood that perhaps a physical experience was not to be neglected. You said in recent research that you expect mall store footprints to shrink more than 20%. Is that from where we are today after already all of the shrinking that we've seen so far this year, or are we already most of the way through that?
No, I think that there has been some shrinkage heading into this, but I think it's safe to say that a 20% level for retail in the malls is a pretty safe bet right now. We do a lot of work with our REIT and our CMBS team, and we publish a lot of combined research, and I think our view is that the malls are going to have to evolve. They're going to have to change. They're already in that process. I mean, you see grocery stores in traditional malls now. I know I live out in Bucks County, Pennsylvania, and there's a mall in, I think it's Plymouth Meeting. I get confused a little bit with the geography out here because we're still kind of new, but there's a Wegmans grocery store in a traditional.
Looks like I have to cancel the order to sell short. Let's see what's going to happen next.
Brokers of the world to actually move into the mall space. So that would lead to some store expansion for those retailers because they're going to put new property or new locations there.
Yeah.
And those drive traffic. The issue that you may have is with the surge in buy online pickup and curbside and everything, what's that footprint going to look like? And, you know, I look at what Walmart's done, what Target's done with curbside. They've done the best they can, but they can certainly improve that, and that takes a different layout and a different kind of parking and ingress-egress phenomenon. So we're still, you know, again, this is going to be evolutionary, and I think, you know, the assumptions that it can happen quickly, I think, are a little bit flawed.
Oh, different view of retail coming from Moody's and from the debt market as well. Charles O'Shea of Moody's, thrilled you could be with us today. Just a lot going on this morning. Lisa, I want to go back to the yield market. I mean, the great story in a sort of a quiet, nudgy week is yields higher.
Yeah, and I think it's really important that you keep talking about the dissonance between yields creeping higher in absolute basis, but when you take a look at the real yield, the inflation-adjusted yield, it's remained really steady. And this raises questions. How much is this pricing in some sort of yield curve control going forward? How much is this due to just inflation expectations being the main driver right now for yields going up, not necessarily any kind of term premium, Tom?
A couple things off the simulcast radar here as well. Turkish lira, Erdogan having a better day of it. Testing 7.40 yesterday. Stronger Turkish lira down to 7.36. Safe haven study. Swiss franc pretty much churning here as well. Really not a story this morning. I do want to mention gold. We spoke with Dennis Gartman earlier this morning on Bloomberg Surveillance, and he framed his support on gold from 1900 to 1925. We're there right now at 1922, and he re-advocated gold, but a huge change for Gartman, not in euro, not in yen. Dennis Gartman looking for gold as a pure playoff U.S. dollar as well. Again, futures flat this morning. Coming up, Lisa Bramlitz and I want to talk about the vol in the market. And I don't mean the volume, I mean the volatility. We can do that with Dean Carnett of Macro Risk Advisors with a VIX at 22.06. One of the great surprises for me of Dow, 28,130 as the VIX is not set in a lower statistic. So we'll do that with Dean Carnett this morning on the equity market. We'll dive into this volatility and the dynamics of that equity market that none of us own enough of. Please stay with us on a simulcast from New York. This is Bloomberg.
coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Some things you see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
We're looking for a continued improvement in the economy, but the pace will probably slow down now that we've had this quick rebound.
They're going to keep rates at zero for a really long time, maybe forever.
This is a secular downtrend in the dollar that could be 10, 15, 20% over a 2-year period.
The large industrial, the behemoths of our time are probably not where capital wants to flow.
There is a certain logic in the market doing better than the economy here.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Mr. Farrow off, Lisa Abramowitz and Tom Keene on an eventful August day. And as we go to Jackson Hole, what is so interesting, Lisa, is where central bankers will be. And, of course, one of them was Mark Carney, the governor of the Bank of England. It is just out across the Bloomberg that he's finally landed. I thought he'd be running the Toronto Maple Leafs or something constructive like that. But he will join the venerable Brookfield of Toronto. This is one of the sterling companies of Canada, 100,000 strong. Bruce Flatt leading it. And Lisa, he will go all ESG.
Yeah, he's going to be leading the environmental, social, and governance investment strategy at Brookfield, which Brookfield expects it to eventually rival the size of its real estate infrastructure and private equity businesses. I do want to just note this, Tom. Do you know that ESG assets crossed the 1 trillion line this month for the first time ever? This, according to Morningstar, definitely gaining steam. The question is, what does that mean? How do different places define that?
This has clearly been one of the leading efforts of the former governor of the Bank of England, our Francine Lacroix, numerous times in interviews on ESG as he led the Bank of England. I would say more than any other central bank, clearly out front. Maybe I'd give a hat tip to the Germans and the Bundesbank as well, but clearly leading on ESG. And I've heard him speak on this at Davos as well. But this is, to me, Lisa, a very natural outcome to see him join Brookfield, and of course with all their real estate properties and the heritage of Toronto as well. I also think he joined it just to get their seats at Maple Leaf Garden.
Evidently. Are you going to try to petition for some?
Maybe we can go up and do an ESG seminar with Governor Carney when the Canadians are in town. Anyways, that on Mark Carney this morning. What we've got right now is a churn to the market, of course, looking to Jackson Hole. Michael McKee with that Esther George interview in the last hour, really setting up the virtual conference and the speech tomorrow by Chairman Powell. Lisa, very quickly here before we get to Dean Kernet, what are you looking at this morning?
Well, I'm watching bond yields, as you say, because I'm trying to understand how much this is inflation expectations ticking up and what this says ahead of the Jackson Hole conference, especially since that is in the forefront of the discussion. Is this a bet that they're going to be successful in igniting inflation? And if that's the case, where is it going to come from, Tom? Is it just printing money? Because that doesn't work all the time. It's the velocity of money.
Well, it is the velocity of money and also the ability to have research notes that are clear and clean. Dean Kernet is expert at that. He's at Macro Risk Advisors. He does Greek letters. He does really sophisticated, fancy stuff around capturing volatility. And what you do is you trade it. You buy volatility or you sell volatility. And of course, the benchmark for that is this VIX statistic that we quote, some form of measurement of the volatility of the base Standard & Poor's 500. Dean Kernan, the VIX right now at 21.75. It's broken 22 just in celebration of you being with us. Where should the VIX be right now? What is your guess on the direction of the VIX relative to the market?
Well, where should the VIX be? That's a great question, and I think there's a couple of ways to answer it. The simplest way is just to look at the day-to-day movement in the S&P, what we call the realized volatility. And if you look at that over the last, let's say, 10 days, it's only 7.3. So it's just this very series of quiet days in the market. Over the last month, it's 10.3. So the VIX at 22 is trading, 2 to 3 times what the movement in the S&P would actually justify. There's always a little bit of a premium.
Yeah.
But really what's happening, and I have to say, it's one of the most fascinating times to look at volatility in the equity markets, because there's an event that has some import in early November that sticks out like a sore thumb in terms of pricing. In other words, the market's pricing of VIX futures is so contingent on the uncertainty around the election, it's causing some substantial dislocation. So to answer your question, the VIX should be much, much lower relative to the movements in the S&P 500 than it is, but the election is holding everything up.
That's not good enough for a simulcast, Dean Kernan. How many figures lower should it be? And I don't want you to take it out to tenths or hundreds, but should the VIX be at 19? Should it be at 15?
You can easily argue the VIX can be in the 14 to 18 range based on the movement and the volatility, based on
See how I did that, Lisa?
Yeah, that was
I got
good.
it out of him.
Yeah, well, okay. So for people who aren't necessarily looking at the exact levels on the VIX, what does this mean in terms of trading volumes, in terms of trading activity? I mean, there's been this feeling in markets that the Fed has your back. They're going to suppress volatility, and that's going to make the risk-adjusted returns for stocks and riskier debt more attractive. Does that hold even though there is that blip up around the November election?
Well, vol and volume tend to be pretty correlated, right? People trade more when they have to, and they change their mind more frequently when there's a lot of volatility. So the absence of that is leading to a pretty quiet late summer, with a notable exception that there is quite a bit of activity in upside call options in some of the tech behemoths. So that's really the only place in the options market where you see a substantial amount of volume is the momentum stocks like Tesla, where we're seeing a lot of volume. So it is a quiet period. I think for the folks that use options, it's a little bit of a conundrum. One is, as I said, options are expensive. You use an option, you buy an option when you think the insurance that comes with just paying the premium is a good deal. Well, as I said, it's really not a good deal. The price of the option relative to the movement in the S&P, there's a big disconnect there. But secondly, people do remain worried that the bottom can just fall out of the market at a given time. Remember, we had just well past the peak of the crisis. On June 11th, the market fell 6%, the S&P, out of nowhere, really. And I think those types of real one-day shocks still linger large in people's minds. So even though options feel like a better sale than to own, people are still worried. So what you see is kind of a standstill and just not that much volume.
Dean, I love it. Breaking news. It is slow. It is August. It is slow on every front. Absolutely. Going forward, though, one thing that we've seen, Dean, has been volatility of volatility. Sort of this idea that it can seem like a very calm market, but all of a sudden you see that incredible spike. And that's what you were referring to, I believe, when you say things could get a little bit more spicy later on. What's the main asset class to look at? What's the main trigger point that could fuel that kind of vol?
Right. So we look, there's a couple of things that will cause that. One is positioning itself. Sometimes the market trips itself up. It's not the economy. It's not something on the geopolitical side. It literally is positioning. And I don't think that right now there's a substantial one-sidedness of positioning in things like the VIX or the S&P that might cause that. Remember, in early 2018, when the VIX blew up, it was really about a product that melted down because it had gotten so big. Where I would look, Lisa, is in gold.
On the floor. I mean, Andy, just give us a little sense of what it's like to be there. I mean, we know it's a skeleton crew, but what's it like to be in the room right now?
Yeah, well, Jen, I can actually show you. I'll tilt my camera around. You can see the arena is empty. And as I said, this is usually 18,000 people are, you know, up to the rafters, literally hanging on every word that Warren and Charlie say. And yeah, there is a skeleton crew. There are a few people here, obviously personnel from the arena and some Berkshire people as well. Most people wearing masks. I ordinarily would be wearing a mask, but that's a little difficult if you're broadcasting. So I've taken mine off for the time being, but it is a very different scene, no doubt.
So, you know, as you said, super different here. But one thing that stays the same, Andy, is that on this day, we also get earnings from Berkshire Hathaway. That is the tradition, and that is kept up here as well. So there was a lot of questions about how the company was performing through this quarter. And I know Julia's been looking at that before we dive into the earnings as well. Julia, your thoughts on today?
Yeah, Jen, I mean, there are a lot of things that stand out. And I think one of the takeaways, if you read Warren Buffett's annual shareholders letter earlier this year, there was this accounting rule change that took place back in 2018. So I think there's a lot of focus specifically on the investment portfolio, the losses there, north of 50 billion. But again, this goes back to this rule change where you now have to mark those equity investments. So you're going to have big swings in the market. When you have a 200 billion plus portfolio, you'll also see big moves there. And another thing that stood out to me, Jen, just going through the numbers, was the cash and cash equivalents of 137 billion. Something that we keep asking Warren Buffett: is there an elephant-sized acquisition on the horizon?
Well, great, Julia. Thanks. And it's interesting up here on the stage. You can see there's these guys are getting ready, and there's some See's candy and Cokes up there. So not to worry. Miles, earnings a big deal, and you know it's interesting. We talk about this a lot, but Berkshire Hathaway, of course, has such a big cross section of companies. It kind of reflects, really, I like to think, the best of America's economy. So what have you got for us?
Yeah, well, as Julia mentioned, obviously the investment losses in the quarter were considerable, including investments in derivatives. Lost there of $55.6 billion during the first 3 months of this year. Now, if you take the operating businesses, this is the insurance, the utilities, railroads, and all the et cetera businesses, I guess we could call them, you know, whether it's the boots, for the loom, and so on. Operating profit there, $5.87 billion in the quarter. Now, that is down from about $6 billion from that same group last year. So the profits there were down overall. And I think the commentary from Warren Buffett inside of the 10Q, I guess we can assume that Buffett was the one writing this, outlining the challenges here, saying that, you know, the government private sector responses to contain its spread, the virus's spread, that is, began to significantly affect operating businesses in March and will likely adversely affect nearly all of our operations in Q2. Effects may vary, duration and extent is unknown. Adding elsewhere in the 10Q that many of Berkshire's businesses are essential: the railroad, the utility, some of the insurance businesses, the service businesses, and they noted that, you know, things were okay in March, but a line in here: revenues of these businesses have slowed considerably in April. And so, Andy, I know we've talked so often on our programming about the broad swath of companies and how they're all responding to this. And I think Berkshire's, you know, commentary here pretty much in line with what we've heard. It's just that we're finding it sort of all in one place here.
Yeah, I think that's right, Miles. And of course, we really look forward to hearing what Warren Buffett has to say about the picture when it comes to the company and, of course, the overall economy as well. Joining us now is Greg Warren, Senior Equity Analyst at Morningstar, and one of the top finance experts covering Berkshire Hathaway, who is normally here in Omaha for the meeting, but joins us remotely. And Greg, welcome. Before we get to you and ask you the first question, I want to play some sound of an interview that I did with Warren Buffett back in March about COVID-19 and his response to that. So let's listen to what Warren Buffett had to say about that.
So how do you assess what's going to happen, and does that change your outlook?
Well, it's going to be terrible, but I've always felt a pandemic would happen at some time. I mean, I've actually, in describing things that can be that can interrupt the progress of not only this country but the world. It won't stop the progress of the country or the world. I mean, this is a terrible event that's occurring. We don't know how terrible, and it may not turn out to be that big a deal when we get through, but it may turn out to be a very big deal, and we just don't know, and I certainly don't know, and nobody knows. But there will be other things that happen in the world in the next 5, 10, 20 years. That's the way the world works. It's not a totally even course.
Yeah, and just to remind folks, I was talking to Buffett, that was the second week of March. And so, we've since seen how it's played out. And, it's unclear whether it's truly abysmal and horrible. It's a pretty terrible situation. So I think he was kind of spot on. But Greg, let me bring you in and ask you about that a little bit and about, what you see as the effect on the company and all the various portfolio companies that Berkshire has.
Well, I think to your point, I think it's one of those classical known unknowns. There's just so much not knowing the duration of how long the economy is going to be shut down, how long it's going to take for things to recover. It's going to have an impact across the board. So from that perspective, even a company like Berkshire is not going to be able to sort of avoid the impact from not just the pandemic itself, but the recession that follows and the slow recovery we're going to see overall. When we look at the operating companies on the insurance side, it's hard to gauge completely how good of a job they did of avoiding losses related to the pandemic. Pandemic insurance has not really been underwritten historically that much by a lot of companies. I think Munich Re is the only one that's been out there the past couple of years. But Berkshire obviously did have some exposure. They took some losses, some claims during the first quarter, anticipation about what they're going to see the rest of the year. And there is some workers' comp issues and some other things that need to be sort of worked through. So we'll see that on that side of the business. But to your other point, the utility business is probably not going to be impacted all that much. There's a divergence within the manufacturing, service, and retailing side of the business where there are some real economically sensitive businesses that are going to get hurt. And I think even Charlie Munger said it last week. There's some smaller businesses within Berkshire that probably won't survive this. And then we look at Burlington Northern, which is an essential business, as far as the railroad goes. But even Union Pacific, which is BNSF's closest competitor, was out there during their 1Q earnings talking about the fact that volumes might be down 25% during the second quarter.
Greg Warren with Morningstar, the senior equity analyst there. Thank you so much for joining us on this day. I know you're going to be sticking around watching this coming out live from Omaha, Nebraska. Again, we are all waiting for Warren Buffett and Greg Abel to start addressing shareholders and anybody that's interested out there. It's going to come up at 4:45 Eastern time. So we've got about another half an hour here. We're going to take you up to that moment. Coming up next, we're going to be joined by the author of several best-selling books on Berkshire Hathaway. He's even on Warren Buffett's reading list and got a shout out in Buffett's most recent shareholder letter. Professor Larry Cunningham from George Washington University will be here in just 2 minutes, so stick around. A lot more to come.
Do you know Susie? you talking to me, Mackenzie? All right, joining us now is Professor Lawrence Cunningham from George Washington University and author of 2 new books about Buffett and Berkshire, Margin of Trust and Dear Shareholder. Larry, great to see you. Thanks so much for joining us.
It's nice to be back with you, Andy. I was with you last year. This year is a little different, obviously.
Yeah, so what are you looking for at this meeting? There's so much to talk about with everything going on in the economy. What are you picking up the most?
Well, I think the thing to look for is mood in a way. I mean, he'll obviously provide us a lot of substantive information and detail, and it'll be interesting to see Greg in action and how they interact and how he approaches this challenge. But you look for a mixture of melancholy and maybe some hopefulness. Usually it's almost all joy. Most Berkshire annual meetings are a fun fest, and there's a lot of exuberant discussion, and there are occasionally crises or small crises that he has to deal with. But this year, it's much more pervasive. So I think looking for his mood to see how much is melancholy and where the silver linings are.
Hi, Professor Cunningham. It's Julia LaRoche. Thank you so much. I actually just finished Dear Shareholder yesterday. I'm interested in Greg Abel because I think a lot of folk are really curious about him, and he's going to be on that stage with Warren Buffett. Could you give us some insight as someone who studied Berkshire for decades? Tell us a bit more about him.
He's a 20-year veteran of Berkshire Hathaway. He's been running the energy company almost all that time, has allocated tens of billions of dollars of capital, has a proven track record around capital allocation. He's also a first-class gentleman. He's a delightful human being. He's nice to talk to. And I guess the thing I want to share is that whenever I talk to Greg, whether it's in person or on the phone, I sometimes wonder, am I talking to Warren? And I hope that comes across today. He's got the same sort of Midwestern sensibility, modesty, and astuteness. So I hope that comes through today. I think it'll be very interesting to see.
That will be interesting to see, especially since it won't be with Charlie Munger, who we're so used to seeing the 2 of them up there doing their little routine. Professor, it's interesting to hear you talk about mood because I think of Buffett as the eternal optimist, really. And now we see this cash pile at 137 billion, and really not that many investments made when we were seeing the volatile market in the first quarter. Are you surprised by that? Do you think there's anything to read into there about the mood, about his outlook for the economy and his company?
We will want to press on that today. The most obvious thing is that the phone isn't ringing. Berkshire's acquisition and investment strategy is to wait for sellers to call them. And right now, no seller is calling, mainly because anybody who wants it pretty much can get government money at close to zero. So negotiating with Warren would not be a rational thing for most sellers to do. As the political appetite for that kind of life support wanes, I suspect he'll get some more calls. The other thing to think about is the cash pile, as you say, is rising. He's always insisted on having at least $20 billion of cash available to handle insurance liabilities, and that number may be low in the current environment. I don't know how low it is, but some of that 138 will have a claim on it that's different from in the past. And the other thing is it's very difficult to value anything in the current environment. So he'll only make an acquisition if he's got a reasonable basis.
As you can see from our ticker, we have quite a few open positions on euro, short position. So I'm about to close one position and I'm placing a stop on profit. A position where was holding at 118.014. And the profit will be, I stop placing stop on profit at 117.914. Okay, I place stop. If it will reach this level, we will have nice profit. Guess which one? If you follow our trades, you're supposed to know.
Like you've got 100% of your money and you're going to keep it in, and it's up to us to take care of it.
Question is, I guess, Larry, is this going to be a great stock to own for the next 5, 10, 20 years? What do you think?
Yeah, I think so. And this is Warren's refrain all the time amid mid-crisis. The short term can be catastrophic, but the long term is typically stable and will recover. And that's my prediction of the meeting today. It's a lot of melancholy over the past month and the next quarter or more, but over the next 5 years, 10 years, we'll all get through this, and it will be a memory.
And, Professor Cunningham, you've, basically been through, not basically, you have been through all of Buffett's annual letters for the last 50 years. And in just thinking about maybe what lessons a younger Warren Buffett might have for current Warren Buffett, or for a lesson that investors can heed right now, because I think, the tone of everything that's been happening in the world is no one knows anything. Greg Warren just telling us this is a known unknown. What in the Buffett catalog, I guess, as it were, perhaps helps as a guide map for figuring out how to kind of just keep your head on straight in a time like this?
Yeah, it's good to read those letters because they exude rationality above all. And, he's got a great quote from just 2 years ago about all of the significant crises that have plagued, if you like, the second half of the 20th century, and we got through them all. Now, this is on an order of magnitude much greater, but nevertheless, I think staying rational, staying practical, sticking with fundamentals, and appreciating that we've gotten through a lot of calamity in the country, and we'll get through this too, not without some costs and dislocations that are unpredictable, but we will get through. And so I think the young Warren Buffett out there, being rational, being a fundamental, analytical person is a very prudent approach.
Certainly an internal optimist. Professor Cunningham, I would love to get your take on what do you think, or what would you want to ask Warren Buffett or Greg Abel today if you had the opportunity to pose a question to either of them? What would that be?
I want to ask him about the buyback. Everyone's talking about, well, shouldn't Berkshire use some of that $138 billion to buy back its stock? We all know that the board authorized Warren to buy large amounts of Berkshire stock at a price of 120% of book value or less, and he's hit that price, and we haven't seen much buying back. He says that would be a rational use of capital, at least if it is a better opportunity than other alternatives. So I'd like to push him a little bit on that. In particular, what I'd like to know is one reason we may not have seen the buyback is precisely because the other element that he insists be true is that the shareholders have information to decide what the intrinsic value of Berkshire Hathaway is. And it just might be the case that that's not possible to do. So I'd like to have a dialogue around the rest of the discussion on share buybacks, not just the price value, but do the shareholders have the relevant information?
Professor Larry Cunningham from George Washington University, thank you so much for joining us today. Although we didn't get to see you in person, it was great to get a chance to talk with you before the meeting starts. And of course, for all of you that are waiting out there for the meeting to start, we are expecting it at 4:45 Eastern Time. Again, Warren Buffett and Greg Abel taking questions there. It's going to be a little bit different this year, but it is a year you are not going to want to miss. So stick around. Coming up next on the other side of this break, we're going to have Berkshire Hathaway Director Ron Olson join us again as we are counting down to the Berkshire Hathaway annual meeting exclusively right here on Yahoo Finance.
Hey, Ron.
We're clear, guys.
Ron Olson joined there.
Thank you, Larry.
Thank you, Professor.
Thank you, Larry. Thank you so much.
Work with people who are high potential.
The best investment you can make is in yourself.
Morning.
What are you doing?
Isn't it obvious? We're delivering live market coverage and offering expert analysis completely free.
We're helping you make sense of the markets from anywhere you are.
I get that, but what are you doing here?
Nice pajamas.
Really? I say pajamas.
Or pajamas, whichever.
Okay.
Yahoo Finance. Watch today on Channel 604.
Welcome to the show.
Let's make finance make sense.
This is going to be good.
Dr. Doolittle. You can talk to animals.
Yes. Welcome aboard.
What kind of polar bear works on their tan?
Are you even a bird? What bird stuff can you do?
Well, what bear stuff can you do? You win this round.
What's the worst that can happen? Oh, it's beautiful tonight. Doolittle.
Rent or own the latest movies with Verizon Fios On Demand.
My mother used to say a long time ago, whenever there would be any catastrophe that was on the air, she would say, always look for the helpers. Because if you look for the helpers, you'll know that there's hope.
All right, we're now joined by Ron Olson, who is a Berkshire Hathaway director. Ron, so great to see you. You're in California, I take it, and obviously not here. So what are you going to miss most about not being here this weekend?
Most? The $1 dilly bars. But beyond that, just the excitement of the shareholders and the families moving about the floor of the auditorium, between the businesses, having fun with each other, sharing the whole experience as we've come to know it over the last 50 years. And I have to say, I am sad that I'm still here in California and you're there somewhere anyway with Warren, and I'll miss being in the scene.
Hey, Ron, it's Jen Rogers here.
confirmation on this the support package. If we don't get it, we're looking at the possibility of a double dip recession, Q4, Q1, and further negatives on wage inflation, certainly.
Okay, this is an incredibly important statement by Dr. Hooper, folks. Let me explain this again. On the standard NBER discussion of negative GDP 2 quarters in a row, Q4, Q1. And I know it's squishy, and Dr. Hooper's not like getting out a calculator to figure that out. But the idea of going back into recession, Peter, is across a country of immense inequalities. How have our politicians not acted so far? We see action in Germany, action in the United Kingdom, and we can't seem to get it done to avoid the Hooper recession.
Well, that's Hooper recession if we get no further fiscal support, if the vaccine doesn't materialize until well into next year. I mean, we're looking at some clear negatives here. As I said, the data up to now have been a little bit more positive, but slippage on consumer confidence and the possibility of further setbacks on COVID-19 as we go into the winter months. These all say we're looking at the potential for a more negative picture than certainly is built into the market at this point.
I will just say, Peter, one of the big confusing points for me is that as we talk about the potential for a double dip recession and yet the support that we've seen from the Federal Reserve, from easing of credit standards, we are seeing an actual tightening in lending standards by banks. And this comes from Goldman Sachs. They put out a report showing the fastest pace of tightening in loans to businesses over the past couple of months, going back to the last recession. Does this concern you? Is this the banks seeing something that the rest of the market isn't?
Well, Lisa, it's interesting. Yes, those lending standards have been tightening impressively, as you would expect when economic situation deteriorates significantly. At the same time, the default rate, which normally catches up to these kinds of tightening standards, has not really moved that much. I think the aggressiveness of the fiscal response that we saw initially, the support through PPP, and the Fed's Main Street lending facility waiting in the wings, it hasn't been a factor yet, but we do expect it will become more important. All of these are leading to a little bit of a disconnect between this tightening of standards and the eventual fallout in terms of what's going to happen as credit crunch hits businesses.
Peter Hooper, thank you so much with Deutsche Bank. Greatly appreciate it and look forward to your thoughts after Jackson Hole as well, head of their economic research. This is an absolutely historic headline for anybody who studied Europe from Jean Monnet. Coming out of World War II, all the trials and tribulations of Europe, just avoiding the memory of World War I and World War II. Germany will use funds from the European Union to trim a modest $18 billion of their new debt. Lisa, there are many people that never, ever, ever, ever thought you would see that headline.
Yeah, the sort of increasing integration of the European Union, and this really has been one of the themes of the 2020 era, which has been so strange, and part of what's been giving the euro such a boost, this idea that the EU is coming together, and this headline just seems to confirm it, with Germany and the EU becoming that much more intertwined.
Somewhat of a surprise with euro weaker, perhaps off this headline, 117.81 is a weaker euro over the last 20 minutes as well. Again, a mix to the market, doldrums maybe. Tech is green on the screen. We'll see where that goes this morning. Off durable goods, yield surge, 30-year bond up a good 4 basis points, 1.43% as well. David Rubenstein of Carlyle Group, and of course his wonderful interview series coming up next. As well, looking today at the dollar, stronger. That's a big change. Actually getting some nice strength. I missed that. Getting some nice strength to the U.S. Dollar. The euro again, 117.79. Yen, 106.43. Stay with us, a simulcast on radio and television. This is Bloomberg.
With the first word news, I'm Rishika Gupta. Hurricane Laura is taking aim at the Texas-Louisiana coastline, and the National Hurricane Center warns it could rapidly strengthen to become a life-threatening Category 4 storm with winds of 130 miles an hour. It's expected to make landfall late today or early tomorrow. The hurricane has already disrupted oil and gas production in the Gulf of Mexico. It could keep some of America's biggest refineries shut for months. Secretary of State Mike Pompeo highlighted President Trump's leadership in his speech to the Republican National Convention. He said the president had, quote, pulled back the curtain on the predatory aggression of the Chinese Communist Party.
The president has held China accountable for covering up the China virus and allowing it to spread death and economic destruction in America and around the world. And he will not rest until justice is done. He has ended the ridiculously unfair trade arrangement with China that punched a hole in our economy. Those jobs are coming back home.
Pompeo's speech appeared to violate State Department guidance that prohibits political activity whilst on official travel. He spoke from Jerusalem. At the United Nations, the U.S. has lost its bid to reimpose sanctions on Iran over its nuclear program. The president of the UN Secretary Council rejected the Trump administration's demand. All but one of the Security Council members has said the U.S. proposal was illegal. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
We know it's a pandemic, and we want to be very responsible for pricing. We plan to underprice this vaccine for its value, especially in the pandemic phase.
I think there's a lot of unique opportunities that are available to people who are creative, who have a vision for the future. I think, 10, 15, 20 years, we'll look back and there'll be 10, 20, 30 world-class companies that were created by people who we probably are thinking are crazy right about now.
The gentleman from Pittsburgh, Mark Cuban, what an interesting life at University of Pittsburgh, and on he went to huge prosperity, including invigorating, many would say, enthusiasm, literally how an owner should be within sports, with his Dallas Mavericks as well. Always an eventful interview, made more so by David Rubenstein and Peer-to-Peer, the gentleman from Carlyle Group, and of course we've been thrilled with his wonderful interviews. Well, how do you prepare for a Mark Cuban interview, David Rubenstein?
Book, I read that. He's got lots of press, so I read all the articles about him over the last 2 years or so. But he is a person that is very smart. I mean, if you don't know him, you might think he's just a bombastic person who spouts out things at basketball games. But he's a very, very smart person. He built a company way ahead of the technology revolution, sold it at a big price, and he managed to make certain that the profits didn't go away when the tech bubble burst occurred. And he's made a lot of money over the years, but he's actually very thoughtful. And I think the interview was much more impressive than I thought it might have been.
You have been good at gauging politicians to be. It is the discussion of Mark Cuban entering American politics. Any inclination of that?
Well, like a lot of people who make a lot of money and don't know what to do with themselves afterwards because they got all the material things they want, they say, why not run for president of the United States? This idea has occurred to a couple of people, obviously. And Mark Cuban actually was a friend of Donald Trump. And Donald Trump, when he was running for president, initially talked to Mark because he thought Mark was supporting him. Then ultimately, Mark decided not to. But Mark looked at running for president this time and concluded after doing some polling that he wouldn't get very far and didn't want to do it. His family also wasn't in favor of it. But he's still only 62 years old, and he could run again.
So do you expect Mark Cuban 2024?
I think there'll be a lot of people in 2024, but I would say the idea that a wealthy business person who has a lot of money to spend could run for president of the United States and actually win is not as ridiculous as it once was. Yeah. So I wouldn't rule anything out, but Mark is actually very creative. And what he's done with the Mavericks is pretty impressive. He bought it for about $280 million. It's probably worth $2.5 to $3 billion now. And would say the biggest problem he has in his life, I said, Mark, everything seems to work perfectly for you. What problems do you have in life? He said, well, I have a teenage daughter. And managing a teenage daughter is more problem than anything else I've ever had.
That would be true as well. Time for a surveillance correction, folks. I did mention the Pittsburgh affiliation of Mr. Cuban, but Lucas from Bloomington emails in and says, hey, stupid, he went to Indiana University. Lisa, pick it up from there.
He's from Pittsburgh. He grew up in Pittsburgh, but Indiana University had a business school which we could afford. He didn't have any money. And so he's from a Jewish family. His name was changed, I guess, somewhere in Ellis Island. He went to Indiana, made a fair amount of money as a bartender and so forth, then moved to Dallas because the weather was good. He said the women were beautiful, and he wanted to just have a nice lifestyle, and there were some jobs there. But he started a number of businesses, and he's done quite well over many years. Almost everything he's touched has worked out well.
Yeah, and when he was talking about the NBA, he was saying he would welcome a Jewish player, or frankly, any player, even from Mars, if they could win. I am wondering, David, talking about all of that money that Mark Cuban has, what's he buying?
Well, interestingly, he's been a long-term owner of Netflix shares and Amazon shares. And he would say a large part of his net worth is actually the money he's invested in those companies. He has been, in the past, a stock trader, and he knows a lot about tech stocks, but he says right now there aren't that many tech stocks to buy, so just load up on the really good ones and go for a ride.
David, this is really important. I want to rip up the script here. I just think it's so important. David, you mentioned something really important. The guys are entrepreneurial, and maybe they're like Carlyle with private equity. But so much of the wealth construction of these people, including Mr. Buffett's very successful Apple investment, is making conventional share investments. Do we underestimate that in the media, that they just make sound, conventional, traditional share investments?
Well, the tradition has been generally that if you make private investments, you can add value to them, and ultimately the return will be greater. And the return has been good in the private equity world. However, if you bought Amazon, Netflix, Apple, those kind of companies 5 years ago, 3 years ago, 2 years ago, 6 months ago, you would have done spectacularly well. If you take those companies out of the stock market indexes, the indexes aren't doing quite as well. But those companies have just driven everything. And it's just my big mistake that I sold after the IPO my shares in Amazon.
Well, within that, and that's okay, David. I was in triple leveraged all cash, so that's how well I did. David, what are the opportunities right now with all this cash sitting around? It's almost too good to be true. The trillions of dollars of cash on the sidelines.
Well, it depends on what you are interested in. If you're in public shares, I do think the public shares are pretty high right now, so I would be a little leery. And I do think that after the election, whoever wins, you'll probably see some softening of the market, because I think the federal government will probably not be able to put that much money back into the economy compared to what it's already done. In the private sector, in the private equity world, I do think there's some opportunities, but nothing is cheap today. It used to be you would buy a company in a private setting for 8 or 9 times cash flow. Today, they're 14 or 15 times cash flow. And you just have to either accept it or you're not going to be buying anything.
David Rubenstein, thank you so much. We're really looking forward to Mark Cuban, a peer-to-peer conversation with Mr. Rubenstein tonight, 9 p.m. before our campaign coverage with David Weston. Lisa, I think that's really extraordinary, really important message about how these guys, they do this, they do that, but they're like everybody else. They're just trying to find shares to buy and sit on them.
Yeah, and buy the right shares to sit on, and this has been the conundrum. And right now, the right shares to sit on have been anything tech, anything that is part of the new economy. Tom, there was a headline crossing just now that caught my attention that's related to big tech. Mike Pompeo, U.S. Secretary of State, speaking about China and continuing with some of the rhetoric that we've heard, saying that the U.S. will act until China discontinues the behavior that it's engaged in the South Seas, saying that it will continue to restrict visas on those tied to the South China Sea issue. Interesting to see this coming at the same time that we see China pledging to increase its soybean purchases and some sort of agreement on trade. A lot of crosswinds here and sort of leading to still ongoing tensions.
Yeah, I would agree. Cross currents there. What's changed in the last half hour in our simulcast, folks, is we've seen the real yield break down, negative 1.02, rounding it down further. That's not a big deal, but nevertheless, the trend this morning off durable goods and durable good revisions better has been a higher yield structure, a steeper yield curve, and with the nominal yield where it is and inflation expectations, the real yield breaks down. We'll give you more on that as we can. This will be fun. The mandolin player, Mark Benioff of Salesforce, the Dow component. Mark Benioff, out of a small apartment years ago. He's now a Dow component. Lined up with Emily, 5 p.m. tonight. Mark Benioff on the Dow Jones Industrial Average. This is Bloomberg. Good morning.
for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
From New York City, for our viewers worldwide, I'm Taylor Riggs, and for Jonathan Barrow, the countdown to the open starts right now, and we are 30 minutes until this morning's opening session. On the opening bell, we are trying to extend some of the record highs that we got yesterday at 34.43 on the S&P 500. Better than expected durable goods orders, but that doesn't seem to be moving the market much here. You are catching a sell-off a little bit here on that 10-year yield. 71 basis points catches my attention. That is near the high end of the trading range that we have seen in the last few months. First, we begin with the big issue, markets at a standstill ahead of the Fed's Jackson Hole Summit. The risk rally searching for a spark with Fed Chair Jay Powell on deck.
It's a big week for central bankers to speak. Jackson Hole.
Mr. Powell's comments in Jackson Hole.
Fed Chair Powell is going to have a framework review of monetary policy.
The new monetary policy framework.
Will there be anything on guidance? Maybe not.
There's really no rush for forward guidance.
Will there be anything on yield curve control? Probably not.
Yield curve control would be put aside for now. Yield curve control is really, sort of off the table.
We're going to talk about inflation.
The Fed moving from a 2% target to a 2% on average.
Focus on average inflation targeting.
Some form of inflation targeting, inflation tolerance.
The key buzzword is inflation tolerance.
If that's the case, then interest rates can stay low, even if inflation goes beyond 2%.
Everyone's trying to avoid a temper tantrum here.
The sense of the Fed's got my back, don't worry, everything's okay, we can take risks.
Joining us now is Michael Mickey, our Bloomberg International Economics and Policy correspondent. Mike, we have been counting down all week to this moment.
Yeah, treasuries have been range-bound for quite some time. Not bad for the stock market. It keeps going up. But treasury traders would like some news, and they're hoping Jay Powell shakes things up this week in Jackson Hole. They want to hear, as you heard, about average inflation targeting, letting the economy run a little hot to try to bring down unemployment more. And that is what the Fed is likely to talk about. The question is, does Jay Powell actually say it's going to happen? Inflation hawk Esther George, the president of the Kansas City Fed, joined a host of Fed officials who've told me recently they don't think that it's necessary in September. She says inflation is not the problem right now.
We always keep our eyes on inflation and what impetus may come to that. I think importantly, what we see today are really generally deflationary kinds of forces. So until demand comes back, until we see the economy regain its footing, it's hard to see in the near term.
You can see on a chart that we brought along, we showed this yesterday as well, what they're talking about with average inflation targeting. The Fed is able to push the consumer price index, and in this case, the PCE index, up and down a little bit as it moves rates around, but it hasn't been able to get over the red line, the 2% target rate. So they want to put it somewhere in that green band, let it run above that red line for a little while. nobody knows if they can actually do that. George says the economy is not going to regain its footing, nor is it going to get more inflation until they deal with the virus. The latest data out today semi-supports that. Mixed news on durable goods. We got a very big headline number, up 11.2%, but that was mostly cars. You can see the drop there, the drop off there a little bit in transportation, not nearly quite as good. Overall growth seems to have slowed a little bit in July into August on the back of the spike in the coronavirus cases. You can see it also in the New York Fed's weekly economic index, that kink there on the right-hand side. We'll see if that gets revised away, but as you can see, Taylor, we're still a long way below the level of activity we were seeing in February when the whole virus started.
It is going to be a long climb out of that hole. Michael McKee, thank you as always. Now, Bank of America weighing in on Chairman Powell's upcoming speech, writing, quote, "The bar is high for the Fed to deliver a dovish message on its reflation policy revamp. We expect Powell to give an overview of the coming changes, the thought process behind them, and why other options might remain on the back burner for future consideration." Joining us now is Mark Cabana, Bank of America's head of U.S. short rates strategy. Mark, what are you expecting to hear? What are the markets expecting to hear from Powell?
So I think the markets are expecting an update from Powell on how the framework review is progressing. But beyond that, I think that there's a pretty wide range of what the market is anticipating out of Jackson Hole. We don't think that Powell is going to deliver anything that's materially market moving today, tomorrow when he speaks. Now, the market's going to be very focused on inflation and how the Fed will adjust their inflation outlook in the future. We think that what the Fed will likely end up signaling, and Powell will end up hinting at tomorrow, is that the Fed is going to move to adopt a more flexible inflation regime where they will tolerate moderate overshoots of 2% after periods of elongated undershooting, which we're in right now. We don't think that Powell is going to go so far as to say that the Fed is moving to adopt an average inflation targeting regime, where the Fed would shoot for average inflation at 2% over time, primarily because that could tie the Fed's hands a little bit more than they might be willing to do. So we think that Powell will likely give an update on where this framework review is. He will say that it should be completed in the very near future, likely at the September FOMC meeting. But we don't think that they're going to go so far as to say that they're moving to an average 2% inflation objective over time. Instead, we think that they will say that there's greater willingness and tolerance for the Fed to see inflation overshoot above 2% for a period of time after a significant economic shock or after a period of persistent undershooting. And frankly, that could be a little bit of a disappointment to the market that's probably looking for more.
Is it also disappointment to the market that we can't even get to 2%? And when do you see us getting to that level?
Yeah, so I think it is very much a disappointment for the market that the Fed has undershot for so long. And I think that there is a healthy dose of skepticism in the market that, yeah, the Fed may want to get core PCE above 2%, but that's generally wishful thinking, at least until the economy is in a fundamentally different place than it is today. Now, we don't think that we're going to see 2% core PCE at any point in the near future. We also doubt that the Fed expects to see that anytime soon. You know, in September, we will get updated economic projections from the Fed that show how they see the economy evolving through the end of 2023. And I think it would be a bit surprising to see the Fed expect that they're going to see core PCE above 2% on a sustainable basis at that point in time. This is just because the economy has gone through a massive deflationary shock, and it's going to take a very long time for the economy to recover from that, and that's going to necessitate a Fed that keeps rates on hold for a very, very long time. You know, just framing this in the last economic cycle might be useful. You know, the Fed waited about 7 years before they raised rates after the great financial crisis, and not even then could they get inflation sustainably above 2%. So we're likely going to be looking at a Fed that is keeping rates on hold for a very, very long period.
Mark, then, what else is in that toolbox for the Fed?
Yeah, so we hope that we'll hear a little bit more about other tools that the Fed is considering and how they are assessing them. And we've learned a little bit about this from Fed commentary over recent weeks and months. Things to watch out for are a more explicit average inflation target, yield curve control, potentially adjusting the duration of the Fed's asset purchases, a twist, if you will, of the yield curve. and then potentially negative rates. Now, we've heard a bit about all of those things in the past, but it would be nice to hear a refresh of how the Fed is assessing them. We know that according to the most recent FOMC minutes, that yield curve control is not seen as a particularly preferred policy right now, just because rates are so low. It could result in unwarranted increase in the size of the Fed's balance sheet, and it could be difficult to exit from. But it would be nice to hear a little bit more from Powell himself as to how he is viewing that tool.
Mark,
similar.
Yeah, can you remind me, as we're talking about all these tools, yield curve control and inflation with yields rising, how do you have both?
Well, so yield curve control would essentially be the Fed capping interest rates at, a certain tenor of the rate curve and saying that we're not going to let rates rise above a certain level over that period of time. Now, it would be powerful if the Fed were to say that, we want to see inflation above 2%, and we're going to continue to cap rates consistent with forward guidance, meaning that we want to see an overshoot. To me, yield curve control has a place as the economy potentially comes back and we do see inflation begin to pick up. But it's not really something that's necessary right now, just because you've got 5-year notes yielding 30 basis points, which essentially tells you that the Fed is expected to be on hold for a very, very long period of time. And so it's not necessary, likely at this stage, for the Fed to implement that. But I do think that yield curve control could complement this notion of an inflation overshoot, just given that it is one way to really strengthen forward guidance. The market has a pretty solid understanding, though, of what the Fed wants to do with its policy outlook, at least today. Other policies to keep an eye on, again, will be that twist of the yield curve if the Fed talks about that. And if they address negative rates, we expect that they will continue to downplay it in the current toolbox for the Fed.
Yeah, well, lots to keep our eyes on, and we know that you'll be keeping us updated as well. Mark Cabana, thank you. And coming up, the GOP touting the record rally in U.S. equities. But our next guest says stocks could be primed for a correction. That conversation coming up next. Morgan Stanley's Mike Wilson, you do not want to miss it. And the market's trying to extend some of those record highs after some of the mixed economic data this morning. We're up 3 points on the S&P. This is Bloomberg.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
Right now, our economic health is coming back. With emergency spending and tax cuts, Americans are going back to work. There's a housing boom, there's an auto boom, a manufacturing boom, a consumer spending boom. Stocks are in record territory.
National Economic Council Director Larry Kudlow focusing on the economic bright spots in the second night of the Republican National Convention. Let's bring in Kevin Cirilli, Bloomberg Chief Washington Correspondent. Kevin, your takeaways.
A tale of two competing economic narratives. That's what we're seeing very much on full display, both last week at the Democratic Convention and this week at the Republican Convention. And Larry Kudlow promised that there would be more tax cuts on the way should President Trump get a second term. Take a listen to what he said.
Now, looking ahead, more tax cuts and regulatory rollback will be in store. Payroll tax cuts for higher wages, income tax cuts for the middle class, capital gains tax cuts for investment, productivity, and jobs.
On that specific issue of the payroll tax cut, yesterday I was speaking with some top Republicans in the Trump administration and on their reelection campaign, including Donald Trump Jr., and they said that the issue of the payroll tax cut is going to be something that they are going to hammer home between now and Election Day. Why? They argue that for middle-class workers who have been fortunate enough to keep their job and not be furloughed during this economic downturn, that they ought to have an increase in their salaries for their hard work. That is something they think will resonate among suburban voters, even though many people have said that the business community it would be hard for them to implement such a tax policy, especially right now.
Well, we have about 2 months until we find out the results of that. Kevin Cirilli, thank you.
Thanks, Taylor. Yeah.
Now, Mike Wilson of Morgan Stanley saying political tensions are heating up, but betting that it won't prevent more fiscal aid, writing, quote, Congress remains gridlocked over the next round of fiscal stimulus. Without it, we think the recovery will almost assuredly roll over, which is why we think there is little chance Congress will fail to execute, especially in an election year. And Mike Wilson joins us now. Mike, it's interesting, though, we aren't getting stimulus anytime soon. When are you expecting Congress to act?
Yeah, thanks, Taylor. Thanks for having me today. Look, I think there's very little doubt out there when we talk to investors that Congress will eventually act to get this bill passed. The question is when, and we think it could linger into the middle part of September. Now, that means there's going to be a bit of a gap risk with respect to the benefits that have been going out and then when they're going to resume. And we think after sort of September 15th is when that risk becomes, detrimental to the economy. So we're hopeful that by mid-September, the two sides will come together. We'll have a bill passing. And look, quite frankly, we need a little pressure to maybe make this bill even a little bit bigger, which wouldn't be such a bad thing.
Is some of that pressure coming from the markets, the way they screamed in March?
Well, I think the pressure is off right now, quite frankly. I mean, with markets making new highs every day, the bond market seeming, well-behaved. There's really very little volatility. So the markets have really not been putting pressure on Congress, which, quite frankly, is one of the reasons why they've been dragging their feet. And oh, by the way, the economy is not really putting pressure on Congress at the moment. I mean, the data remains quite good. So if those two things were to change, then you better believe it that Congress will act swiftly, and they'll probably act even more aggressively.
Mike, talk to me about your price target with the 33.50 and the pressure on that, even as some of the other bears have capitulated a little bit. Tobias Levkovich of Citigroup, David Kostin of Goldman Sachs. What are you seeing that other bulls aren't seeing?
Well, what I would say is that, while our call, this year was well-timed in March and April to get aggressive, we've been surprised, quite frankly, at just how fast not only the recovery has occurred, but the stock market itself has responded to that. And that's our bull case. So our bull case is 3,700 by, June of next year. And it's looking more likely that that's going to become our base case. I mean, this is not an exact science. That upside case is going to be driven by earnings growth. That's been our view, right? The revaluation of the stock market has already happened, right? The Fed has acted swiftly. Rates have come down and multiples have expanded. People have complained about that, saying, well, it doesn't really reflect reality. But that's the way it always happens, Taylor, in a recession, right? Multiples expand as earnings come down because the market knows that that's the trough, and 2021 is going to be a good year for earnings growth. And quite frankly, it's looking like it may even be better than what most people are thinking. And that's where we think people could be surprised next year on the upside. The earnings growth is better than what they're anticipating.
And it's earnings growth, and you also mentioned the Fed. And as you know more than anyone in that discount dividend model, it is little r, the rate at which you're discounting future earnings inflates that present value, all thanks to the Fed. How much, though, of that bull case scenario, which increasingly is looking like a base case scenario of 3,700, is really dependent on rates at zero?
Yeah, it's a great question, and it's been, like I said before, this has been the main driver of the rally so far since March. It's been a revaluation, right? Equity risk premium is compressed, rates have stayed low, and that means multiples can expand. We think 90 to 95% of that is over, meaning it's very unlikely in our view, if our scenario for V-shaped economic recovery plays out, then it's very unlikely that 10-year yields are going to go to new lows from where we've been already. We think, in fact, that the more likely outcome is that 10-year yields rise. And that could actually put pressure on multiples in the short term if that were to happen over the next 2 or 3 months. But then we think the earnings is what's going to surprise on the upside, which is what drives the market next year. So I wouldn't be surprised if we stall out here in the near term as, we get comfortable with the recovery, the stimulus comes through, we get past the election, rates are able to rise, earnings come in, but multiples compress. And then next year is really an earnings story, and that drives the upside in the target that we've talked about a minute ago.
And the risk, though, Mike, as you just mentioned, and very smart in your note, and I want to pull up a terminal chart if the producers can here.
I closed position on euro. You can check my ticker when we open this. So everybody, if you follow our trades, you know that all prices on ticker. This is the prices we entered position a few days ago, a week ago. So one of the position we closed, and we have a profit 1,000 pounds.
Which I don't have a lot of doubt in that, assuming we get the fiscal, obviously, but that's to be determined. So 1.5% from here would be a dramatic move, and that would have a dramatic impact on valuations, not just for stocks, but all asset categories. I mean, gold and some of these other assets have really gone up because rates have come down, particularly real rates. And if that dynamic were to change, abruptly, then we would see a reset. Now, I want to make it clear, Taylor, that's a positive outcome. Okay, that's not a bearish outcome. It's a positive outcome because what it's saying is the bond market is now confirming, in fact, what the equity market's been saying all along, which is that the recession is behind us. We're moving forward. The recovery will continue into next year, and we'll have a very powerful earnings recovery on the back of that.
Mike, talking about some of the overweight and the underweight sectors, which I believe, and I want you to help confirm or clarify, that it does feel like a value rotation and optimistic here. Overweight financials, industrials, materials. Is that on future or hopes of future growth here in the U.S.?
Yeah, let's talk about that. It's almost exactly the opposite of the way we were positioned coming into this year, which is we were long essentially all the bond proxies last year coming into this year in anticipation of a recession, quite frankly. We thought a recession was likely in 2020. We had no idea a pandemic was coming, clearly. That was the catalyst, but all the signs were there. So it was a late cycle, end of cycle environment. And now we're in the exact opposite environment. We're in an early cycle recovery environment. And in that scenario, I don't really like the growth value continuum so much as I like the cyclical defensive continuum. And so first of all, high quality growth stocks always work generally. Sometimes they get overvalued like today, and maybe they need to pull back a bit. But really the barbell that we've been espousing since the recovery began is a barbell of growth stocks that are reasonably priced, that won't be too vulnerable to a rate rise, combined with early cycle cyclicals. And that's what you're seeing in our recommendations. What we're really underweight are defensive bond proxy parts of the market, some of the expensive tech stocks and growth stocks that will get hurt if we're right about the rate move.
So underweight tech, I'm sure someone isn't happy with you out there. Talk to me about that. Is it just a pure valuation call despite the fact that they have been leading this market all the way up?
Yeah, well, they've been leading this year, but if you actually go back to March 23rd, which is the way you have to kind of consider what the leadership has been doing since this recovery began, it's really been the cyclical groups have been great. Now the growth stocks have done great too. And as I said before, yeah, sure, we're underweight tech. That doesn't mean we don't own tech stocks. We're just not putting new money necessarily in. I think people are too overweight that space. And, our fresh money buy list, which is our focus list, has, outperformed the S&P handily with being underweight technology. So it is possible to outperform while being underweight, not necessarily zero weight, some of these growth stocks. And the reason we feel comfortable doing that is because we still think the biggest risk in the marketplace that's underpriced is back-end rates moving. And so we think that people are taking more risk in these long duration assets than what they perhaps think they are.
Always smart, always intelligent. Mike Wilson, thank you as always for your time. And coming up, the analyst action that you need to know. It's next in our morning calls. And later, Invesco's Christine Hooper joins us to weigh in on U.S. versus the rest of the world. That conversation still ahead. As you can see in the markets, trying to eke out some of the optimism that Mike Wilson was just talking to us about. 34.43 yesterday, another record closing high. Those continue. We're advancing 4.5 points. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Countdown to the Open. I'm Taylor Riggs in for Jonathan Farrow. Time now for the morning calls. A look at some of the analyst recommendations on Wall Street this morning. First up, Jefferies more than doubling the price target on Tesla to a street high $2,500. The analyst citing the potential for phenomenal output growth. Wedbush raising the Apple price target to a street high $600. The analyst citing growing optimism ahead of the 5G iPhone. And finally, Telsey Advisory upgrading Urban Outfitters to outperform, citing surprisingly better than expected quarterly results. And coming up, Washington Crossing's Kevin Karen joins us for the opening bell. That conversation, it's next. This is Bloomberg.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The Boston Symphony Orchestra presents BSO at Home, a collection of concerts, at-home lessons, and behind-the-scenes stories to enjoy while you stay at home. Learn more at bso.org/at-home.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
This is Countdown to the Open. I'm Taylor Riggs, and for Jonathan Farrow, just moments away from the start of trading. Another day, you guessed it, another record high. On a closing basis yesterday, 34.43, and intraday now surpassing that. At a 34.46, we are advancing 3 to 4 points here on the S&P. Tech as well, extending those gains, more record highs. I want to flip up the board. Mike Wilson of Morgan Stanley earlier told us higher yields is a good thing. It means that it is confirming what the equity markets are telling us, that we see higher growth out on the horizon. 10-year yields out up 1 basis point. We're going to call it about 70 basis points or so as the risk on mood continues, with crude marching higher. I want to get on over to the markets desk. Bloomberg's Abigail Doolittle joining us now. Stocks moving here at the open.
Taylor, let's start out with some earnings winners, especially Salesforce.com. These shares are absolutely soaring. They put up a very big quarter. They beat adjusted earnings by 116%. They put up revenues of greater than $5 billion, the first time that they have ever done that, with 5% growth. They also, in this environment, gave a full year view, which is pretty impressive. And it looks like the diversification from all the acquisitions that they've made, their cloud business really helping out. Plus, as you know, they will be added to the Dow next Monday. And so indexers forced to buy it too. That stock really on fire, up 18%. Hewlett-Packard also a beat and boost quarter, very strong. The stock is popping sharply higher. Analysts saying that they put up strong execution in a difficult environment. Intuit beat. The revenues were better in all segments, with tax especially strong and small business growth also impressive. Advanced Micro up 1.3%, seeming to ride Piper Sandler's upgrade and boost yesterday. Investors still want in on some of that constructive commentary. Turning to some other movers, it's interesting here in the pre-market at least, Lithium Motors, Bank United, and Trupanion all added to the S&P 500, S&P 400 mid-cap index. Typically, this would cause stocks to pop. Lithium Motors, that's not happening. However, you can see for Bank United and Trupanion it is. And again, the reason for the big pops there for those latter two stocks is indexers are forced to buy those stocks. And then Carnival, not feeling the love this morning, Taylor, down 1.8%. They have announced that two particular cruise lines in 2021 will not be sailing in the beginning of 2021 because of the pandemic. So a little bit of a disappointment there. Not as many boats setting off into the seas as perhaps investors had hoped, Taylor.
Yeah, Abigail Doolittle, thank you there. Now, consumer confidence also falling to a 6-year low. Labor market concerns intensifying with the pandemic weighing on spending. For more, I want to bring in Bloomberg's Scarlett Vu to look at, well, where that leaves the retailers.
It's a pretty split decision here for the retailers, Taylor, especially as we look at the earnings. Urban Outfitters is surging this morning after the specialty retailer saw net sales that topped the highest analyst estimate. Of course, the bar came down quite a bit, but all brands were profitable, and the company stood out for providing more guidance. Dick's Sporting Goods, obviously a beneficiary from the increased interest in outdoor exercise. We saw sales of sneakers and athletic gear lead to the highest ever second quarter sales. Bed Bath & Beyond didn't report earnings, but did give details on its restructuring plans, including cutting 2,800 jobs. That stock a little changed right now. Nordstrom reporting a second quarter wider than expected loss. Now, when you look at Nordstrom, the lockdown left the department store chain with only half of its operating days in the quarter versus last year. So it moved its anniversary sale to August from July. As you can see, sales falling across all channels: digital, Nordstrom Rack, full price. The product mix in particular is a problem here for Nordstrom. It doesn't have as much athleisure leisure and casual clothing as well as home goods. Instead, it has a lot of office attire and special occasion wear. No one's doing any of that right now. Like everything else in the economy, retailers are seeing a pretty clear divide. Who's winning? You've got Amazon, the grocery stores, big box chains like Target and Costco. Who's not? Apparel retailers and department stores. And much of it depends on whether you could open during the pandemic. Urban Outfitters a little bit of an outlier here. Also, one thing to note, Taylor, is that retailers are pretty reluctant to give any kind of guidance. You mentioned consumer confidence. It recovered from the initial plunge we saw in the spring, but it started to roll over once again. We've got a spike in new infections, persistently high unemployment, no agreement on future stimulus, all weighing on consumers' minds. And all of this with the weather set to turn and perhaps the return of flu season as well.
Well, we're not in athleisure. Scarlet Fu and I are still in our work clothes. Believe it or not, we might be the only two. Scarlet Fu, thank you for joining us. Joining us now on the phone for this is Kevin Karen of Washington Crossing Advisors. Kevin, the economic data looked good, and then we got that consumer confidence yesterday, which started to show some cracks. If that translates into a drop in